Can you guys hear me now? Okay, Vincent, you should be able to hear me now, I think. How about now? All right. How about now? All right, perfect. Now we're on. Now we're on. I'm going to do this. Not too much space here. Thank you very much for joining, everybody. The live chat today is members only. Members only. You can sign up, subscribe, and become a member we have new members already. I really appreciate it. I'm gonna show this quickly. Vincent, thank you very much. And 2x21 for becoming YouTube members. Um, what's the helium voice? Okay, let me just deepen my voice. Hello, everybody. Welcome to the Q2. This is Q2, but we're going to start with Q1 update. All right, Joey, welcome. All right. So let's kind of go through the Q1 analysis real quick. So we have about half hour, and and the stock price right now is 1.2% down. Let's kind of just refresh what we got to in Q1. As you can see on your screens, um, in Q1, Tesla achieved 1.2 billion GAAP operating income, 1.1 billion GAAP net income, and 1.5 billion non-GAAP net income. I'm going to put up this as a short as well for good luck. Give me 1 second. So in Q1, Tesla said, we experienced numerous challenges in Q1 from the Red Sea conflict and the arson attack at Giga Berlin. So neither of those were Giga Berlin production ramp a tiny bit in Q2 because they have to kind of ramp again. So maybe we'll keep an eye on that. And then global EV sales continue to be under pressure as many car makers prioritize hybrids over EVs. Correct? I think that continued still. While positive for our regulatory credit business, we prefer the industry to continue to push EV adoption, which is in line with our mission. To support our growth, we have increased awareness and expanding vehicle financing programs, attractive leasing terms for our customers. So the one thing that relates to this paragraph in Q2 that we need to watch out for is going to be the gross margin for automotive business. Gross margin for automotive business. You know, in Q1, Tesla heavily discounted the cars on the new inventory page. In Q2, Tesla introduced low-rate financing. My base case is that they're going to be about the same. Quarter-over-quarter, automotive gross margins should be about the same. And I'm going to show you this tab on your screens now. You can see on this tab, oh, 21 cents. I'm cutting off a lot. Don't know why that is. Let's see. Give me 1 second. How about now? Is it better now? Is the audio better now? Okay, good. Looks like it's better, I guess. Okay, this is better, Justin says. Okay. And let me know how it goes throughout the stream. Okay. I'm going to be checking the live chat every now and then to see what's going on as I go through the screens. Okay, let's continue. So right now you're seeing on your screens my quick calculations here. This is to calculate automotive gross margin. Let's type that in here. So this would be gross profit, and this is gross margin. Okay. So what I did here is I took automotive sales This does not include leasing revenue. This is excluding leasing revenue. And this is COGS, cost of goods sold, excluding leasing revenue. Okay, the difference is going to be gross profit, and this cell divided by the revenues is going to be a gross margin. So we're going to do the same for energy. So these two figures are going to be important. Okay, so we're ready with the Q1 numbers. We're going to plug in the Q2 numbers. My base case assumption, this is going to be about the same for Q1, Q2, about the same. And this should increase quite a bit. Okay, so we want the energy figure to increase quite a bit in Q2. And the reason for that is because Tesla dramatically increased installations of energy storage in Q2. Okay, now not all of that increase will reflect from Q1 to Q2 because revenue recognition for energy storage installations are done over time, but it should reflect somewhat. All right, and the margin should improve because the Lather factory utilization is increasing. So we want this figure to be above 27, 28, maybe closer to 30%. Anything above 30% would be cause for celebration. This hopefully will stay about the same. I know a couple of people expect it to go down, gross margin for automotive, especially James Catt expects this number to go down. This calculation here excludes leasing revenue, leasing costs, as well as regulatory credit sales. So this is pure automotive margins. Okay. Any questions? Any questions? Please leave in the live chat. The live chat is members only, and you can sign up as a member on the channel, which is only like $2-3 a month. So this shows your support. It also pushes the channel, grows the channel. It signals to the algorithm that you value the channel, and it pushes to other people. So I appreciate all my members. All right, let's continue with the Q1. So we have 18 minutes to go to the close. We're going to share this tab instead. All right. While many are pulling back on their investments, we're investing in future growth, including AI infrastructure, production capacity, supercharger and service networks, and new products infrastructure with $2.8 billion of capital expenditures in Q1. So if you remember, in Q1, Tesla pointed out right here, AI infrastructure capex was 1.0 billion in Q1. 1.0 billion in Q1. So I suspect that's going to be about the same. I think we should probably expect AI capex 1 billion a quarter. This is going to be the biggest spend going forward for Tesla. Tesla needs to invest probably tens of billions of dollars of AI capital expenditures into GPUs, Dojo, etc., to get to robotaxi level. So this figure is going to ramp over time. This figure right here is going to ramp over time. In Q1, free cash flow was negative 2.5 billion. This was driven by 1 billion of it is in capex, AI infrastructure capex, and 1.5 billion was primarily due to production exceeding deliveries in Q1 very substantially. Now that reversed in Q2. So let me just show you this tab now. This is the Q2 2024 production deliveries figures. As you can see here, 444,000 deliveries, about 34,000 higher, 33,000 higher than production. So just based on that alone, free cash flow should be positive in Q2. Okay, this is a figure that we're going to be watching for. I'm going to keep my eye on because the free cash flow number from automotive sales will finance AI investments going forward. So, we can't really dismiss automotive business just yet. It's still very important to Tesla's future. The energy business is not yet at, extremely profitable, extremely large levels. So for the next couple of years, automotive sales are still important, and Model Y refresh will probably improve that quite a bit next year. All right, let's continue. Any questions, comments, please leave in the live chat. To participate in the live chat, you have to become a member, which is only about $2-3 a month. All right, let's continue. We recently undertook a cost-cutting exercise to increase operational efficiency. We also remain committed to company-wide cost reduction, including reducing COGS per vehicle. Ultimately, we are focused on profitable growth, including by leveraging existing factories' production lines to introduce new and more affordable products. Okay. The future is not only electric, but also autonomous. We believe scale autonomy is only possible with data from millions of vehicles and an immense AI training cluster. We have and continue to expand both. To make FSD supervised more accessible, we reduced the price of subscription to $99 a month and $8,000 in the US. Now, around FSD, what I really care about is any kind of commentary around take rate, which I don't think they will say anything on that front because I don't think it's very high just yet. Maybe 12.5 will change that. But if you look at these graphs right here, this graph, okay, as of the last quarter's results, so third week of April, it was just about 1.2 billion miles. Okay, I've seen estimates around 2. Some optimistic folks are even higher than that, but I don't think it's going to be that high. I think it's going to be lower than 2 billion miles, and that's okay. Lower than $2 billion is okay at this time. What I suspect happened is, in April when Tesla introduced free trial, 30-day free trial, I think people tried it. Maybe some of them will tried it. Maybe some of them subscribed, but I think most people turned it off and are waiting for FSD to become really, really good. So FSD 12.4 removed steering wheel nag, but it didn't go wide. 12.5 hopefully will go wide in the coming weeks. And when you don't have to have your hands on the wheel and it's just eyes on the road, maybe that will improve take rate a bit. But I don't expect a material increase in take rate. Like I don't expect all of a sudden 40-50% of owners to sign up for FSD until you can also take eyes off the road and you can do other things like you reply to emails, have a conversation with your occupants, or get some sleep. I think that's really the point where we're going to see a huge increase. But on that path, like that's not going to happen overnight. On that path, we want this number to be increasing, and hopefully at a rapid pace. I actually expect a bit of a kind of slowdown here in Q2, but we'll see. Because this red part right here is due to the FSD trials in part. All right. And we had the Tesla AI training capacity. All right. Let's go back real quick. Let me check the time. 10 minutes to go. All right. We talked about cash flow. This figure is not as important to me as others seem to care. It's really more about this number and the margins and some commentary. This is all good. We had the record energy storage deployment 4.1 gigawatt hours in Q1, and in Q2 I believe it was about 9.4 gigawatt hours. So we'll see how that reflects onto revenue number. All right. We have our gross margin spreadsheet ready to go. EBITDA margin was 15.9%. I believe this will improve due to energy, and operating margin should also improve due to energy. We're going to see a few $100 million of restructuring charges in the operating expenses. We want this number to be positive in Q2. I fully expect it to be positive. And then we're going to see towards the end, we also need to check guidance. On guidance, I think Tesla will probably stick to their 1.8 million vehicles guidance, but when it's all said and done, I think it's going to be slightly lower than 1.8 million. I think this year is just challenged with high interest rates, rising unemployment, and I expect all that to continue. So one thing I do, as you may know, under VA underscore macro, I follow macroeconomic trends, and the Fed is set to lower rates in September, 100% probable to baked in, and the Fed folks don't seem to be countering that. So I think we'll get our first 25 basis point cut in September, but I don't think that's going to be enough to drive capital goods sales, whether it's automotive or housing. I think that will follow next year as the new Model Y ramps. All right. Market share. All right. We're going to read through the commentary when it comes up. We can check through if there's any adjustments here. I don't really expect a massive adjustment. Cybertruck production ramp. Our comments around Cybertruck production ramp, I think, might be important. I expect Tesla to be delivering the $80,000 Cybertruck sometime soon. I think that might be material in sort of commentary around that. I think it's a very profitable product, but it takes time to ramp these things. And until you get to 70-80% production rate of the nameplate capacity of the line, you shouldn't really expect material profits. So maybe they might say something around Cybertruck is contribution margin positive, but we'll see. We'll see if it amounts to anything in the stock price. All right. We talked about AI, FSD miles. Any comments on 4680? There's some questions about the future of 4680 program. So we'll see what Elon says on the call and what kind of commentary they add here in the Q2 deck. So for those of you who just joined, we're going through the Q1 deck for now, kind of reminding ourselves where we're starting from. All right, some energy storage commentary. Services, I think it's going to continue to be flat margin-wise. I don't think it's going to be a major profit driver for Tesla anytime soon. Services and other include supercharger revenues as well as used car sales. Used car prices resale values have been declining quite rapidly for Tesla, and also starting to decline now pretty rapidly for the rest of the industry as well. And I think that's going to continue as long as the rates stay this high. All right, outlook. In the Q1 report, Tesla said, our company is currently between two major growth waves. The first one began with the global expansion, and we believe the next one will be initiated by advanced autonomy and introduction of new products, okay? Including those built on our next generation vehicle platform. In 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023. So, Tesla was expecting growth rate to be positive in 2024, but I don't think it's not looking very likely at this time. Let's see if they change that wording. Not much around cash, not much around profit, and some new vehicles. All right. Photos, charts. I usually just skip these, but we'll take a look as we go. All right, the spreadsheet numbers come from this table. This is towards the end of the presentation because they break out in this table sales revenue, leasing revenue, and regulatory credits revenue. What we want to look at, focus on is this, and cost of revenue is this. This is just from sales, okay? And the difference between those two is gross profit. Gross profit divided by revenue is the margin, okay? And then also we're going to pull the energy numbers as well. Energy sales and energy COGS. Okay. The one thing I kind of caught my eye in the last quarter was the 75 days of payables outstanding. There's a bit of an increase there. Let's see what happens to that. And also days sales outstanding increased quite a bit as well. But that was probably because the deliveries were lower, much lower than expected in Q1. So some of this hopefully will revert. And then we also need to look at the days of inventory outstanding as well. This cash flow statement analysis is going to be kind of ad hoc basis. If I can't understand something from the balance sheet and income statement, I'll come here to get some more color. And now we want adjusted EBITDA higher in Q2. All right, that's probably about it. I think we're ready. 5 minutes to go. 5 minutes to go. Any questions, comments, please join live chat. Omar may join us later. Omar may be able to join us later. He has a link to the to StreamYard, and we'll see. So Vincent asks, let's go through. I'm going to just change this real quick. So we're waiting in investor relations. It's going to appear right here. Vincent asks, let's pull up the question. Is it accurate that the cost of the Megapack has come down significantly in the last year? Is that due to the later ramp or lower battery costs? Yeah, both are true. Later ramp has Christopher, thank you. Later ramp, as the capacity utilization of a factory improves, the per unit cost of any product declines pretty dramatically. The rule of thumb in the automotive industry is that you're not making any money until you get to 80% capacity utilization. And this is why, Rivian, Lucid, and other Me Too EV companies just haven't been able to succeed because they had all these kind of huge plans. They promised to their potential investors, we're going to achieve this, we're going to achieve that. And they didn't even achieve half of it. So they kind of ended up with all this excess ample capacity that is just fixed cost. And so if you can't, utilize that fixed cost, that's kind of it's hard to overcome that at that point. So they never achieved positive gross margin. Rivian says they're going to achieve positive gross margin in Q4. We'll see about that. I highly doubt it. And really what matters anyway is the operating margin. So the other thing I want to pull up is, let me switch to this right here. So this is my X account. Okay. Actually, before that, give me 1 second. Okay. This is James Cat. So let's go through James Cat's forecast real quick because this isn't going to come out until another 5 minutes or so. I did this in the X space last night, but so here you can see James Cat is assuming energy gross margin to decline. Okay. Right here, James Cat believes margin stays flat in the low to mid 20s, but in Q2, gross margin moves from 24.6 to 23%. Okay. I think that's a bit of a stretch, but if this happens, like if energy margin indeed goes down, that's not good for the stock. Okay. All else equal. If you assume automotive margins don't improve and energy margins also go down, that would not be good for the stock. So keep that in mind. Okay. Chris says, a new member, I would think that inventory days would see a sizable decrease due to sales over production for vehicles, at least for finished goods. Yeah. Well, it depends. I think that there will be a decrease, yes, but we'll see. We'll see about that. Because it had quite a bit of a jump in Q1, so I think some of that will reverse. Let me see here. So if you look at this page in the Q1 deck, global vehicle inventory, days of supply. Tesla was the industry leader, I think still is the industry leader, 15, 16, 16, 15 days throughout 2023, and then it jumped to 28 in Q1. And that's because the deliveries numbers dropped quite a bit. So you can see from 484,000 to 386,000. And in Q2, that figure was 444,000. So hopefully this will come to teens again, but we'll see. TBD. Okay. All right. Markets closed. Tesla closed 2% down. And we are now waiting. Let's see. Let us see. So what I do is I pull up TSLA ticker and go to latest. You can see here, usually it pops up first here. You can see on your screens now the latest tweets. I'm not responsible with some of the tweets. You can actually come to my screen if you tweet something with the TSLA ticker. That would be interesting. Google, Tesla reporting earnings. Let's see what they bring to the market. Tesla results expected in July. I actually don't even look at what analysts expect. I just look at the fundamentals. My channel, my account are usually for long-term investors. We're not traders. We care about the company's years out future, decades out future, and that tends to be my audience anyway. Hold your breaths. If you want to join live chat, sign up as a member. This is a members only live chat today. Refresh. Let's see those hideous. Okay. Tesla earnings out in 3 minutes. Are you ready? We are ready. Give that a like. All right. Let's see. It never gets old. Earnings excitement. Come on, Elon, send it. I'm also checking investor relations page. Okay. Tesla stock is down 1% after hours. Sometimes people just try to troll in these messages, so don't. Let's see if this is true. Q2 adjusted EPS versus SM. So adjusted EPS miss. Let's see. The stock is down 1% after hours. I ignore some of this. I mean, they may be true, but all right. Let's see here. Revenue 25.5 billion estimated, so above. Adjusted EPS lower than expected. Okay. Just waiting for the link to the presentation. Okay, here's the presentation. So let's pull this up, share this tab, and let's go through it. Here's the Q2 2024 update. All right. Like I said, we don't care too much about the trading aspect of things. The stock is flat now after hours. We're going to go through the fundamentals. So we're going to read through this together. Get ready for the earnings call. 1.6 billion GAAP operating income in Q2 after restructuring and other charges. That's good. 1.5 billion GAAP net income in Q2. 1.8 billion non-GAAP net income in Q2. Okay. Operating cash flow 3.6. Free cash flow positive, like we expected, 1.3 billion. AI infrastructure capex was 0.6 billion in Q2. Okay, great. So again, close to 1 billion AI infrastructure, like we expected. Positive free cash flow, like we expected. Good. Record engines, we knew this already. Optimus began performing tasks autonomously in one of our facilities. Okay, we knew that. Cybertruck became the best-selling EV. We knew that. Summary. Q2, we achieved record quarterly revenues despite a difficult operating environment. The energy storage business continues to grow rapidly, setting a record Q2 with 9.4 gigawatt hours of deployments, resulting in record revenues and gross profits for the overall segment. Okay, we expected that. We also saw a sequential rebound of vehicle deliveries. We knew that. As overall consumer sentiment improved, we launched attractive financing options, etc. We recognize record regulatory credit revenues. Okay. So that means the rest of the business. All right, let's go through this, continue again more. As other OEMs are still behind meeting emission requirements. Okay, I mean, that's going to continue. So regulatory credits are cash, but you want the non-regulatory part of automotive business to be profitable. Global EV penetration returned to growth in Q2 and is taking share from ICE. We believe that a pure EV is the optimal vehicle design. You can't take credit for this. Okay. Progress continued for our AI initiatives Q2. We reduced the price of FSD. We knew this. Launched free trials. We knew that. Programs have demonstrated success and are laying the foundation of more meaningful FSD monetization. We expect to see an increase in FSD attach rates. Okay. We expect to see an increase in FSD attach rates for our fleet as the capability improves and we increase awareness of the convenience. Okay, so that in a way says it's not increasing just yet, which is exactly what we expected. The stock is down 3% after hours, 2% now. Makes sense. Let's continue. Overall, our focus remains on company-wide cost reduction, including reducing COGS per vehicle, growing our traditional hardware business, and accelerating development of our AI-enabled product and services. Though timing of robotaxi deployment depends on technological advance and regulatory approval, we are working vigorously on this opportunity given the outsized potential value. Concurrently, we're managing our product portfolio with a long-term orientation and focusing on growing sales, maximizing our installed base, and generating sufficient cash flow. Okay. Nothing too material on this page. One can read into this part right here. It kind of tells me that it's not increasing just yet, which is what we expected. So that's confirmation. This is confirmation of what we expected. So far, everything as expected from a fundamental long-term investor perspective. Let me see if there are any questions. No questions. Great. So let's dig into the financials here. Services and other revenue increased 2.6 billion. Okay, that's good. Although here, we're going to dig into the ASP and margins later on. Operating margin increased as we expected. Okay, very good. So another confirmation. Okay, this is not as expected. So EBITDA margin is lower. I was hoping that maybe that could increase a little bit again, but 15.9 to 14.4. So there's also a little bit of divergence between EBITDA margin and operating margin here. So that's something to look into later. Capital expenditures 2.3 billion, lower than the 2.8 billion. The difference is the AI infrastructure capex dropped from 1.0 to 0.6. Free cash flow is positive as we expected. Cash and cash equivalents 30.7 billion. So this is a record cash and cash equivalents for Tesla. All right, very good. Let's see. So the only kind of red flag here is the 14.4% adjusted EBITDA margin. Stock is down 3% after hours. Let me see if there are any questions before I go to the next page. No questions. All right. Total revenue increased 2% year over year in Q2 25. Okay, revenue impact was impacted following items. Growth in energy generation storage, we knew that. Cybertruck deliveries, we knew that. Higher regulatory, okay, we knew. Growth on services, fine. Reduce sexy vehicle average selling price, okay, due to pricing, attractive finance options, and mix. Interesting. This is in line with what James had expected. I thought it was kind of within the possible options, possible outcomes, so it makes sense. Decline in sexy vehicle deliveries. Oh, this is year over year. Okay. Negative FX impact. Okay, so let's see what this says. Impact calculated constant currency basis, actuals that compared against, etc. Okay. Profitability, reduce sexy vehicle ASP, restructuring charges, okay. Increase in operating expense, largely driven AI projects, fine. Decline in sexy vehicle, okay. Growth, okay. Lower cost per vehicle, including lower raw material costs, freight and duties. We knew that. Lower cost of production ramp. Lower cost of production ramp of 4680 sales and other related charges. Okay, fine. Quarter end cash and cash equivalents investments was 30.7, sequential, etc. All right. Global vehicle inventory days 18, and we just said hopefully it'll be in the teens, so that's good. We knew this part, and we knew all this. Okay. Supercharger stations increased 23% year over year. Service supercharger connectors increased 24% year over year. Okay, fine. Great. I expect this rate to slow down in the coming quarters. We'll see. We continue to add, you know what, I'm going to skip to real quick to energy. Actually, let me just see. 1.6. Okay, fine. That's as expected. They added future plant capacity for GPUs here. Fine. Let me look through. In 2024, our vehicle volume growth rate may be notably lower. So they still expect, okay. I mean, I did say that they probably won't change it, but I highly doubt 2024 sales will be higher than 2023 automotive sales. Corpus Christi lithium refinery, Cybertruck, Model Y, Quicksilver. Man, Optimus, we knew that. Okay, nothing to. Oh, adjusted EBITDA went up. Okay. All right, let's go through automotive sales here. So 18.530. Let me just plug this in before I share. 18.530. Automotive COGS right here. 15.962. 15.962. Okay, so automotive gross margin went down to 13.9%. So, yeah, that's a pretty big drop in automotive gross margin. So, 18.530, good. 15.962. Okay. Yeah, automotive business is going to continue to be challenged until the rates come down substantially. I mean, even a 25 basis point cut isn't going to be a huge help, I don't think. 13.9%. Let's look at energy now. And I'm going to share the spreadsheet in a second, but I'm just putting in numbers real quick. Energy generation and storage, 3014. Okay, and the COGS, 2,274. 2,274. Energy gross margin flat. Wow. Okay, so energy gross margin is flat. Revenue. So revenue increased. Energy generation and storage, 1.2 to 2.3. Okay, so it's about a 85-90% increase, I'm guessing, estimating. So lower than the deployment as we expected. Okay, but still pretty high. Quarter-over-quarter increase, very substantial. Year-over-year increase is also similar because Q1 2024 is very similar to Q2 2023. So we're looking at 80-90% increase in, sorry, this is COGS. Revenue, again, about 80-90%, and that's why the gross margin is similar. Okay, 3014. Okay, this is something we're going to have to talk about on later on. I was hoping for a pretty big jump here, but that didn't happen. Okay, now the stock is down 5%. I think that this will be a problem for the stock price. That the fact that this didn't, so if I just share this tab right here with the spreadsheet, okay. So if you look at the spreadsheet, automotive gross margin dropped very substantially from 15.6% to 13.9%. These figures exclude regulatory credit sales as well as leasing revenues and COGS. But that would have been fine if energy margin jumped quite substantially, and that did not happen. Okay, so this tells me, now it didn't go down, it's about the same, but that tells me, despite production ramp increase, capacity utilization increase, and decline in lithium prices, the energy business is going to be, it'll take a little bit more time to get to 30% margin. I think that it will, maybe by the end of the year, but this is not going to be good for the near term. Okay, that's something to keep in mind. Let's continue with our look here. So this is the statement of operations. Diluted EPS increased from Q1 to Q2, but missed estimates. Weighted average shares declined a little bit, diluted on a diluted basis. Basic went up a little bit. Okay, so no material change there. Let's go back to the narrative. Let's go through that real quick. We continue to add our vehicle lineup globally, including introduction of new Model 3 and Model Y trims and additional paint options for the SEX lineup. After a sequential decline in production in Q2, we expect a sequential increase in production in Q3. Okay. The refreshed Model 3 ramp continued successfully, including the introduction of Model 3 Performance in Q2, long-range rear-wheel drive in July. We also continue to qualify more Model 3 trims for the IRA tax credit. Cybertruck production more than tripled sequentially and remains on track to achieve profitability by end of year. Preparation of semi-factory continues and is on track to begin production by the end of 2025. Okay, so that's news. Semi-production by the end of 2025. Okay. Cybertruck production more than tripled sequentially. We need that. Remains on track to achieve profitability by end of year. Okay. So, that tells me, so I think by profitability, they can mean a number of different things. It can be contribution margin profitability, gross margin profitability, operating margin profitability for the product. So it's a little unclear what they mean there, but I'm guessing it means gross margin. So not contribution margin and not operating margin for Cybertruck. So gross margin by the end of the year. Yeah. For the 6A, the production ramp is much slower than expected. It's 2 years late with a fraction of the capacity planned for 2022. And that's the real reason why Cybertruck production is slow. All right, Shanghai. We significantly increased deliveries in several markets supplied by Gigafactory Shanghai in Q2, including South Korea. While the automotive market in China remains among the most competitive globally, we feel that our cost structure and focus on core functionality that drives value for customers, including autonomy, position us well for long term. Okay. Q2 Giga Berlin began producing vehicles for right-hand drive markets and delivered its first units to the UK. Okay. We also began delivering vehicles to Qatar while increasing deliveries to Israel and Taiwan. Our regional production strategy provides flexibility. Okay. Market share decline in Europe as Troy has been alarming us. China, bit of a dip, and US flat quarter over quarter. Let's see if there's any changes on the capacity here in the capacity table. I'm looking at the Q1 while you guys see the Q2 data. So 100,000, 100,000, 550, 950, 375, 250. No change there. No change on this table. All right. The stock is down 3.9%. I think that's justified right now. Future plant capacity, September and December. Okay. So not much of a change in the last few months. And Q3, Q4. And it looks like, let's say 40, it's going to double by the end of the year, is the plan. All right. We focus on reducing interventions with FSD supervised while improving driving comfort. Notably, we rolled out a version of FSD supervised that primarily relies on eye tracking software to monitor driver attentiveness. We also increased the robustness of our next-gen FSD supervised model with substantially more parameters. So right there, what catches my eye here is this is supposed to be 5x. Okay. But in this PDF, it's vague, substantially more. Fine, but something to keep in mind. Okay, this is something to keep in mind. Maybe he'll clarify. Maybe Elon will clarify on the call. We'll see. Looking ahead to future autonomous driving and robotaxi service, we continued progress on software and hardware development. Fine. So again, vague future autonomous driving robotaxi. So we have no idea when this is going to happen. All right. Optimus is performing first task handling batteries in one of our facilities. Fine. South extension of Gigatex is nearing completion. Will house our largest class. Okay, we knew all that. We continue to release software optimizations that enable our increasingly better experience for customers. Spring release including immersive full-screen vehicle controls view when parked, large playback controls, quick access to recent favorites, up next in media player, expanding autopilot visualization. Now, these sound like immaterial, but overall, like the fact that Tesla does software so much better than everybody else is very material. And these small improvements add up over time to the substantial lead that Tesla has. Smaller map on the top. Audible is now available as a native app. Spotify cues can be synced across vehicles, devices, and playback speed can be adjusted. Fine. In Q2, we produced over 50% more 4680 cells than in Q1. Okay. Continue to see cost improvements. In July, so again, no specifics. Okay. And Drew is not going to be on this call to give us some specifics. Maybe we'll get some specifics from his replacement, but we're vague here. In July, we entered validation of vehicle testing for our first prototype Cybertruck produced in-house dry cathode 4680 cells. Oh, good. Okay. Well, that's good. This is news. We entered validation of vehicle testing for our first prototype Cybertruck produced within-house dry cathode 4680 cells. This is really good. We should tweet this out. By we, I mean all of us. We should tweet this out. All right, let's go to X here. So now you're seeing some insight into what I do all day. All right. That's good. That's very important, I think. That's very important. All right. Back to this. I kind of like this YouTube live stream function. This is good. This is good stuff. Oh, JC, thank you very much. JC just chipped in $20. First 45 minutes of the space is better than any Morgan Stanley report. Thank you, JC. Appreciate that. I'm gonna all right, I'm gonna hide that so that we don't get all right. Our non-automotive business is becoming an increasingly profitable part of the Tesla. As energy storage products continue to ramp and our vehicle fleet continues to grow, we are expecting continued profit growth of our non-automotive business over time. Fine. Energy generation and storage. All right, let's see what we got here. Both Megapack and Powerwall achieved record deployment in Q2, resulting in 9.4 gigawatt hours of total storage deployments. Overall, the energy business achieved record revenues and gross profits in Q2. Fine. Lathrop Megafactory continues to ramp successfully, achieving the production record in Q2. Okay, good. So it continues to ramp. So earlier in this space, we discussed whether it was close to being max capacity and everything. This is a bit less certain than that. So we're still continuing, present tense, ramping, fine. So that explains why the gross margin didn't improve. I guess in part explains why the gross margin didn't improve quarter over quarter. The Shanghai Megafactory remains, so this is good news, right? Like right here is good news, okay? Shanghai Megafactory remains on track for start of production in Q1 2025. Okay, that's pretty aggressive, actually. This is very aggressive. So we're going to see energy profitability, later profitability at year end, so Q4, I think. Because in Q1, we'll get the start of production for the other factory. But in Q4, hopefully we'll see a clear indication of what Megapack profitability is like. Hopefully 30% plus by Q4. That's my expectation. While we expect production to continue to grow sequentially, deployments will continue to fluctuate. Fine, as expected. Deployment timing depends on many factors, including project milestones and logistics timing as we deliver product globally from a single factory. Powerwall 3 rollout continues successfully and is now available in Canada, UK, Germany, in addition to the US. Okay, that's good. That's good. Let's tweet that out too. So these are the things that usually get missed, and we don't want that, obviously. These are good news. So Powerwall goes global. All right, back to this tab. Services. Sequential profit growth for service other businesses was driven mostly by service center margin improvement and higher gross profit generation from collision repair. Okay, this is really good. This is really good. Because these are the sustainable parts of the services business as opposed to the used car stuff, which I don't think is ever going to be a priority for Tesla. So let's tweet that out too. We continue to expand our supercharging network and expect to deploy more capacity this year than the rest of the industry combined in North America with a focus on capital efficiency, congestion, and improved coverage. In an effort to increase EV penetration, we remain committed to opening the network to non-Tesla EVs and plan to onboard more OEMs in North America by the end of the year. Over time, network utilization should continue to increase, driving revenue growth and profit generation. Fine. Outlook. We touched on this a little bit. Let's see. What are miles driven under FSD for the quarter? So the question here is, can we tell how the restructuring costs impacted gross margins? So restructuring costs would not impact gross margins. Restructuring costs are in operating expenses. And, the second part, I think in Tesla's case, they're not really recurring, but every now and then Tesla will do a layoff round. So it's part of business. And then the second Chris question is, what are the miles driven under FSD for the quarter? Let's kind of just look at those real quick since Chris became a new member. I appreciate members. You can join live chat if you become a member to the channel, which helps push the channel out to new viewers. So the stock recovered just a little bit to negative 2% now. Okay, good. FSD miles driven. So these are V12 miles. So as I said at the beginning of this video, I said I expect a bit of a slowdown. So you can see the slope of this line has slowed down, and that's as expected because this increase was due to FSD free trials. Okay, we got a bit of that again early in the second quarter, but this is just as expected. 1.6 billion miles as of I think this is as of today, not end of quarter. So there's more than 600 million miles added. Sorry, just a couple hundred million. I mean, this is like again, this is not the important thing is right now is that this is increasing. Tesla will need billions of miles, if not tens of billions of miles, to get to FSD unsupervised. And I think the problem is not that people aren't trying the software. So recent actions by Elon kind of makes me think that maybe he believes the people are not trying FSD because I think that he feels very positive about FSD software. Elon feels very positive about FSD software. Okay. And I agree. I mean, I've used I have a few hundred miles. I tested each version that came out over the last couple of years with friends' cars, and the software is amazing. Okay, especially in Austin, you know, you can't drive. It can't drive 99% of the miles if you let it. Okay, if you're not too worried about perfection and you just let it do its thing, it can drive 99% miles in Austin, and it can also do so in Omar's area as well, in San Francisco, in LA. But people usually don't let it, and the smallest mistake it makes, people take over, and then they say, you know what, I'm just going to do it myself until it gets to perfect. So that high expectation bar is why people just turn it off. And if you, for example, let's just do the quick back of the calculation here, right? So in Q2, they added about 400 million miles, and we supposedly have 400,000 people using it, right? Um, so let's see. So 400 million divided by 400,000, you're looking at 1,000 miles, right? 1,000 divided by 90, that's only 10 miles a day. I mean, that's actually very good still. Actually, you know what? We have FSD free trial in here too. So, I mean, what I can say, I can confidently say that on average, an average user of FSD is using it single digit miles per day. And if you consider the fact that, you know, an average commute, um, I think it's about 50 miles per day. So you're looking at in the teens percentage, you know, 15, 16, 15 to 20% of people's miles on average. I think um, that's probably too optimistic, honestly. But that needs to get to, so the reason why it's in 10, 15% range is because the software isn't that great right now. You know, it still makes mistakes. It's not good enough to earn people's trust. It's not good enough to add time back to your day. You still have to, even with the 12.5 rollout, you're going to have to track it with your eyes. People don't want to do that. They want to be on their phone. Like, it's so crazy to me. One thing I learned in the last year is that you have to think how people think as opposed to how they should be thinking. They don't care that it increases your safety. They don't care. They just want to be on their phone, replying to friends, replying to emails. And until even the eye tracking goes away, I don't expect a massive increase in in these miles right here. But that will happen at some point. And at that point, I think FSD is going to be very important. So the other thing I do for my patrons, so um, I can show you an example. Okay, I think my patrons would understand. So let me show you this Tesla weekly report. So if I show this tab right here, you can see on your screens now. This Tesla weekly report that I publish for my patrons is a quick update on FSD, So this is my base expectation. I expect 2x improvement to 500 miles per critical disengage by the end of 2024. I think we're tracking towards that still. I haven't seen anything to say it's going to be much higher or much lower than that. But more importantly, we have the resale values, and you can see Model 3 resale values in the last 30 days have dropped 2.3%. Model Y resale values have dropped 2.1%. And both of those, like, you can ignore S and X because those are very tiny numbers. Both of those are substantially more, 3 to 4 times faster than the average vehicle resale value in the last 30 days. Okay. This is last week's report. But also, another thing I do is resale value of FSD. So I estimate for a relatively new vehicle with reasonable miles on it, so still quite a bit of life left in it, the FSD resale value is somewhere between $2,000 to $2,500. And that indicates FSD take rate is still low. Because if the value is $2,000 to $2,500, $2,000 to $2,500, and Tesla is charging $8,000, the price exceeds value. Okay. This estimate is based on an analysis of used Tesla vehicles, whether it's on Tesla.com or other sources, or also conversations with other people, my contacts in the used car market. This is still very low figure. Okay. And I think it's limited by the $99 per month. So if you have two options, $99 per month and $8,000 purchase price, most people will go for $99. So until Tesla increases that monthly subscription back to $199, I don't expect this to increase. Even if there's a huge improvement with 12.5, I don't expect this number to increase materially for now. Okay, and then we also do inventory tracking and stuff too. So that's for patrons. All right. Tesla stock is down 2.5% after hours. Christopher says 100%. Okay, great. All right, let me get out of that. All right, let's see. Now, what I'm going to do is I need to figure out how to pipe in the conference call here. Okay, so as the conference call proceeds, I'm not going to be talking, I don't think. Maybe I'll say a few things here and there, but mostly we'll let Elon do the talking, and maybe I'll pull up some sort of document to take some notes so you can see those on the screen. Maybe we can do it that way. All right. So let me pull up the YouTube channel for, can I do that? I guess I can. So this is all live, doing it for the first time. I appreciate your patience. Official Tesla channel. Financial results upcoming at 5:30. We still have a ways to go. We still have a ways to go here. All right. Well, what do you all want to do? I guess we can talk about some macro stuff, or we can go through some tweets, see what people are saying about earnings. Omar said he might join us later on, but it's no problem if he can't. I know he has other obligations. Let's go through tweets a little bit. So we went through the PDF. We went through the results. This is a bit of a surprise, just a slight decrease. I mean, it's actually a pretty substantial decrease from 15.6 to 13.9% gross margin for automotive, excluding regulatory credit sales and leasing. So this is just pure automotive sales. Cybertruck still not profitable. So they implied that in the PDF. Um, Energy is flat. Looks like the production ramp at Lathrop is ongoing. You can see the gross profit increased, but we really need this to increase. Like I was hoping this would be about a billion. Okay, so if this was billion instead, this would be 33%. Like that would be much more ideal, you know. This is as expected. This is lower than, let's look at the 84% increase. And this is going to be about the same since the margin remained the same. So, yeah, and gross profit automotive is about flat. All right, let's go through some tweets here. I'm going to share this tab. Okay. So nearly two. So this is Motorhead Bear. So nearly 20% of gross profit come from regulatory credits versus only 12% to Q1. That's because the automotive, like we just discussed, automotive margin declined. So regulatory credit sales increased. You can see 800. I mean, this is a record. This is quite a jump, doubled quarter over quarter. This will continue to improve. And the bear argument here is that, Tesla can't be profitable without regulatory credits. But the fact is, this is part of the business. Okay, regulatory credit sales are part of Tesla's advantage, and these are available for every automaker. It's just that other automakers are choosing not to produce EVs, and therefore they're going to end up buying credits. Now, this is also potentially good for Rivian as well, by the way, because Rivian also has these credits to sell. So let's look at the Rivian stock real quick, down 1.3% after hours. Okay. All right, continue. 890 million credits. This would have been down. So okay, fine. Like I said, this is part of business. I don't know why people dismiss regulatory credit sales. Let's just tweet that out. Let's see, part of Tesla's advantage. Okay. All right, we talked about all this. 600 million restructuring charges over estimates. Okay, great. Yeah, that was the other question that was asked. Just look at that real quick. It's not that important to me because these are one-time charges. They are higher than expected. But let me go to the statement of operations at the end. Restructuring other 622 million. Okay, the other thing was people were kind of bulking in here, but their associated costs of short has, like, for example, kept these the same and then added a bit of a restructuring charge here. But obviously these will go down, right? Because what's in here is basically, I think the folks got laid off and got paid 1 to 2 months of salary. So that's going to be reducing these items here. So, so this is similar. Okay, so we went back to Q4, and this was quite a bit of jump. So we went back to Q4 here. Yeah, I'd be curious to see what the breakdown of the 622 is, because this is materially higher than folks expected. Okay, so there's something going on in that figure. That was expected to be, I think, a few $100 million. More than $600 million is a bit of a higher than expected. So maybe they'll ask about that. We'll see. All right. Let me see if there are any questions. What are some of the reactions Justin asked? I will go back to that in a second. In your spaces, you were asking about what people needed to hear on the earnings call. What do you now think? Like, my goal with Tesla live. I think at a bare minimum, we should get to a point where we're not surprised. So, um, I like one surprising thing to me is Tesla energy gross margin remained flat. I know, you know, James Catt expected a drop in energy margins. I expect an increase. I would like to know why it remained flat. Some confidence around, increasing energy gross margins in the future would be positive, I think. Um, Maybe something around 12.5, what the rollout is like, what the miles per intervention is like, how much that's improved. Just like we get an update on 4680 production, an update on um, FSD utilization, I think would be good. Is the number of miles per driver, average driver is increasing? I think that would be good. What the miles per intervention, how is that trending? What's that expected to be? So the 12.4 was supposed to be 5x to 10x improvements, and we immediately said in Tesla Live that that's just not going to happen. I think that's an ambitious goal, and if in 2024 versus 2023, as I've shared with my patrons, if we see a 2x improvement, I think that's good. Anything above that is gravy. So something along those lines would be good. All right. That's about it. That's fine. 40 minutes to go to the earnings call. All right. Let's look at these reactions more. Share this tab. Regulatory credits are a huge component of Tesla's cash flow, but come on. Plans for new vehicles, including more affordable models, remain on track for startup production in the first half of 2025. Okay. Well, I'm not as excited about these new affordable models as most people are, but I think from a mission perspective, it's amazing. From a customer perspective, it's amazing. From an investor's perspective, I don't expect affordable models to be profit drivers. And really, what matters to the intrinsic value are these profit drivers. That will come with FSD being closer to perfect. So, huge depending on who you ask. Wouldn't worry about an 8-cent decrease. That's not that important. Okay. Dry cathodes in production. Okay, we talked about that. That's news. Don't know what's going on there. Tesla says plans for new vehicles include more. Okay, we knew that. Sometimes we get these like the same tweet, 20 people. Okay, so this is Dirty Tesla is one of my top 3 FSD accounts, and this was a question last night. So now we know there's a bit of a still work to do around blinking lights. Okay, not sure what that's referring to. Let's go to James Cat here. I was commenting on all the GM X credits I saw. Other credits actually 14.6. Yeah. Yeah, I think people just I have it actually lower. I don't know how that's calculated, but I don't know how this figure is calculated, but I have it at 13.9. So I'm going to look at that later. Okay. Energy margin 24.5 despite massive. I have it at 2.46. Massive increase in deployment. Okay, good. It is you expected lower. Give me a break. It looks like we covered it all. I don't see anything too surprising. And then Omar. Okay. We talked about that as well. Important to note that we also use Tesla. This is 28 minutes ago. Important to note that we also use Tesla hardware for AI computer in the training loop with NVIDIA GPU. We need already. Currently a roughly 1-to-2 ratio. Okay, that's actually, I think we need already. Also, we're changing the name from hardware 4 to AI 4. Okay, that's new. This was supposed to be for AI 5, but okay. That means 90,000. All right, nothing new there. Massive. Okay. One more about some shares. We need that. We need that. All right. Looks like we covered it all. This is new, I think. By the end of 2025. I don't expect. I think this is going to get delayed though. Just my 2 cents, because it depends on 4680 production ramp, and there's a lot of products competing for that supply. So we'll see. Unchanged install capacity. There was a huge focus on, this is from Ashok, huge focus on improving both safety and smoothness in this release. One of my personal tests is to not spill an open cup of coffee while on FSD. 12.5 was the first version where I was able to do that for 30-minute long drives. Okay. Okay. Let's see if there's anything else. Some of our short sellers, bears, sometimes bring some unique perspective in here. It's easy to increase parameters, making them high SNR. Single noise ratio is hard. Okay, fine. All right, looks like we got it all. Generated 92 million operating loss in Q2 by regulatory queries. This guy is the best at spinning things negative. Yeah. Yeah. Let's see. Okay. All right, that's that. Any questions? Habib, Elon, get the right of tax credits for everyone. Get rid of tax credits for everyone. Oh, he said that? Let me see. Did he just say that? Dojo 1 will have roughly 8,000 H100 equivalent of training online by end of the year. Not massive, but not trivial. Okay, so, commitment to Dojo is good. It's a good sign. It's probably going to be Elon time, but, it's still moving in the right direction. Quarterly update highlights, fine. Elon giving props to Zuck. It's a good site. What those parameters effectively do is compress reality. Okay. I think Habib was just repeating what Elon said earlier. Ooh, interesting. A little drama. All right. We are focusing on just, oh, we need already. Okay. Any questions, comments, please put it in the live chat. This is members on the live chat. And yeah, I appreciate all my members. Thank you very much, JC, again. I'll put this on here now that we're not reviewing detailed information. What else can we do before the earnings call? Let's see, how much time do we have? Half hour left, 30 minutes. 30 minutes to the earnings call. This is going to be by far the most popular live stream of this channel. Things are moving in the right direction. A little slower than I would have hoped, but they're moving in the right direction nonetheless. And I appreciate all my patrons, my followers, my subscribers, my members. And when I step back and think about it, it is pretty cool that Tesla Live is moving well. And I really, really like that. And hopefully I'll figure out a few ways to accelerate it a little bit. I think this is important. In July, we entered validation of vehicle testing for our first prototype Cybertruck produced with in-house dry cathode 4680 cells. I think that's important information because it is necessary. Like, you know, based on the report that came out a few days ago, that Elon gave a bit of a I guess, an ultimatum to the team and said, you know, we need to figure this out by the end of the year or we're going to move on, kind of thing. So this is an important milestone. In-house dry cathode 4680 cells, important milestone. So that's going to start going to Cybertruck. So let's see if they elaborate on that on the earnings call. Maybe this is the kind of missing piece for the $80,000 Cybertruck to become this contribution margin positive, so that they can start producing and scaling it, and that's I think that's very important. There you go. I mean, they say to a major cost reduction milestone once ramped. Okay. Okay, good. Let's go back to the statement of operations here, kind of digging a little bit more. So the other thing I do sometimes is let's hide this. Thank you, Christoph. Thank you, JC. The other thing I do sometimes is, if we go back to this Q2 statement of operations, so we calculated sales margins, but there's also leasing margins, right? So the leasing margins can have some information. It's not really conclusive information, but some information about management assumptions here. So if you look at it here, 458 leasing revenue, $458 million of leasing revenue, and $245 million of leasing COGS. Okay, so if you take 458 minus 245, that's gross profit of 213 million divided by 458. That gives us 46.5% of gross margin on the leasing side. Okay, so this is obviously immaterial on an absolute basis, but it has some information value. And I'm going to get to that in a second after I display this. Thanks for the great work you do. Here's a few bucks to take machines. All right. Thank you very much. I appreciate that. um, I never not laughed when it comes to these jokes. I probably shouldn't be laughing, but it's okay. All right. So the information value here is that leasing gross margin is very high, 46.5% leasing gross margin. This is automotive leasing. Okay. So what that tells me is if Tesla wanted to, um, if Tesla wanted to kind of expand automotive gross profits, they can always expand the leasing business, because as this leasing business expands, those gross profits will accelerate at a faster rate. The gross margin will increase. Okay. So Tesla has a very tiny leasing business, and that's by design. Okay. So if I go back to this, let's go to investor relations press release for Q2. Okay. You see on this press release, I share this tab. You see right here, subject to operating lease accounting is 2% for Model 3 and Model Y. There's no Cybertruck leasing. Okay. So Model S and X are tiny compared to this speaking. So it's really this 2% figure. This figure for others like BMW, Mercedes, Audi, and many other brands, even Toyota has a growing leasing business. Theirs is like BMW, Mercedes, like 70, 80%. Okay, so most of their vehicle deliveries are leased out. All right. This is clearly a strategic decision by Tesla to keep the leasing business very low. And we talked about this, I'm sure most of you who follow me from platform to platform know about all this already. But the reason why Tesla is not growing its leasing business is because it introduces an incentive to not innovate. Okay, so the growing leasing business introduces disincentive to innovation. And this is so anti-Elon. This is like very anti-Elon to introduce a disincentive to innovation. The reason is because when you lease out a car, the company holds that vehicle on the balance sheet. So now the company is exposed to the resale value of that vehicle a few years out. And the one thing that kills resale value of a used vehicle is innovation on the new vehicle side. Okay. So the better the new vehicle compared to a couple of years old used vehicle, the lower the used vehicle's value, resale value will be. So you've introduced into your company, into your team, a disincentive to innovation, which is ridiculous. And yet, BMW, Mercedes, Audi do this to an incredible degree. And even Ford, GM, I think they're about more like 40, 50%. And Toyota, Honda is about 30% of their sales are leased out. So this is a statement by Tesla. Okay. So, and I support that decision. But let's say the world went to hell in a handbasket. Tesla can always pull this demand lever to kind of get over a few months of hump, and they haven't yet had to do that. Okay, they can easily increase this number, no problems. All right. We have 25 minutes. 25 minutes. The stock is down 3%, which is, in the world of Tesla, it's nothing. I would have actually given if somebody told me that these results ahead of time, I would have said the stock would have gone down more than 5%. So I think the investor base of Tesla is increasingly focused on FSD and Optimus. So I think we're seeing maybe some sanity, or maybe a little bit delayed reaction. I guess we'll see. Back to this. So we talked about leasing margins. Services, 2,600, 2,440. So that's about 167 million of gross profit. Over here, 80 million. So gross profit doubled, but from a very low base. Yeah, that's actually better than I expected, honestly. That's better than I expected. So that's good. We talked about global vehicle inventory came in the teens as we expected, as we hoped. So that's good. The other thing I want to check is days of supply. Let me just check real quick. Days. We got that. Days. Okay. Days sales outstanding. 14. Good. So I had mentioned earlier in this video, slight increase quarter over quarter. So that reversed a little bit, and this also reversed as well. This is actually really good. Days payable outstanding, way lower than any other quarter before. This is how fast Tesla's paying its suppliers. Okay. Oh, look at that. Recourse debt is almost nothing now. Okay, so there's a bit of a debt repayment. I think let's confirm that with our cash flow statement. Net repayments, borrowings on the vehicle energy product. Okay, negative. Net cash from other, negative. So no, hold on. Net cash flows from other debt activities. Oh, I see. Okay. Cash on cash equivalents increased 2.9 billion. All right. $15.3. Okay. These are probably treasury bills. Some maturity of treasury bills. Okay. What is this here? Net cash flows from other debt activities. Let's go to balance sheet. Current portion. Okay, so that went down. Okay, here we go. Debt and finance lease net of current portion. $2.6 billion increase here. Note 1. Breakdown of our debt. Okay. Vehicle and energy product financing. Okay, interesting. So this is the leasing business. Yeah. And maybe some energy, non-recourse. Okay. Recourse debt is down. I mean, it was close to zero anyway. So maybe some commentary around this would be helpful in on the earnings call. 20 minutes to go. We need to know more about this number right here. This is both vehicle and energy products, so both automotive leasing and also mega packs as well. Okay. I'm sure the 10Q will have more information about this. And that's non-recourse. So our leasing business didn't grow too much. So this is going to be mostly mega packs, I guess. Let me just do this back of the envelope calculation here. So 2%, 440,000. times 30. Yeah, this is mostly energy. Interesting. Okay. All right. Day sales outstanding still very minimal. Good. I don't really see anything else here. We have about 15 minutes, 20 minutes to go. This is mostly due to automotive gross margin declining. Same. Automotive gross margin. This was when COVID restricted supply across the industry and everybody was selling their vehicles at very high prices. And then we started seeing the effect of high interest rates. TTM vehicle deliveries, you can see is flat. I don't expect this to change until the rates come down materially. We can talk a little macro in the meantime while we're waiting. So let me pull up the Finviz account. My computer is not heating up. It's interesting. All right. Share this tab. Markets were flat today, mixed across sectors, even among big tech. Nvidia down 0.8%, Visa, MasterCard down 1%, Amazon up 2%, Tesla down 2%, regular market. UPS down 12%. Wow. GM down 6%. I think they announced they're stopping production of purpose-built robotaxi Origin. So they're giving up on Cruise as expected. They're also giving up on EVs as expected. Let's kind of look at the headlines real quick here. GM delays EV projects and latest industry pullback. Wall Street Journal. GM stock falls on China woes despite Q2 earnings beat. Cruise is giving up on self-driving cars without steering wheels. So all negative. But if you look at CNBC, the headlines were very positive over there. Those ad dollars go a long way. A dig at Elon. We try to rise above politics, focus on the consumer. Okay. Whatever. Let's go to UPS. UPS and FedEx can have some information about the macroeconomy. So let's look at that real quick. UPS falls the most ever after slow start to turn around. UPS domestic revenue slips as customers trade down economy service. UPS stock is having its worst day ever after profits plummeted 30%. Okay. I'm going to look at this later. Dig a little bit more to UPS earnings. You can see the stock here. Let's take a little bit of a quick on the monthly. Wow. Okay. Let's see. Crude oil 77, so that's come down a little bit. It was in the 80s. Natural gas also down quite a bit. Yields came down a couple basis points today. All right. Existing home sales were much lower than expected today. 3.9 million versus 4 million expected versus 4.1. So this is just as I expected, which is as rates come down, mortgage rates come down, people expected, especially realtors, expected demand to surge again, just like in 2022. But they're going to be waiting a while, I think, especially as unemployment rate increases. It's now in the 4 handle, and I think it's going to continue to increase quite a bit. I think people who were waiting for lower interest rates are going to shy again from buying homes, and this also applies to cars because of the increasing unemployment rate, and they feel as they feel less secure about their jobs, I think they're going to continue to delay capital goods purchases. Tesla is in best position to weather all that. Okay, Tesla is in best position to weather an economic downturn uh, for various reasons. Number one, no debt on the balance sheet, no recourse debt on Tesla's balance sheet, very clean balance sheet. Number two, the cars are very affordable. Um, Number three, EVs save money on a daily basis. Like, I think, it's one thing when the economy is good and you're feeling strong about your job. You might be spending thousands of dollars on gasoline and stuff, but as unemployment rate increases and people try to look for savings, I think they may be more likely to switch to EVs, especially now that you can buy a used Model 3 for about $25,000, for less than $25,000, and qualify for the $4,000 credit. So, I mean, Hertz is giving away used Model 3s in the teens now, less than $20,000. So, I think that's going to be an option for people going forward. Um, and then also, I do think FSD take rate is increasing gradually, very slowly, but it's going to accelerate at some point. And Tesla's software business and also the energy business is going to weather these declines in gross margin for Tesla Automotive, whereas other automakers don't have neither of those luxuries. So they're going to suffer more. That's my take. 13 minutes to go to the earnings call. 13 minutes to go to the earnings call. So here you go. We're going to watch it here. Tesla financial results. We're waiting. We're one of these 1,500 people. I'm going to pipe this in. Hopefully it works. And I'm just going to be in this little corner here. And, maybe what I can do is, let me see. Yeah, I need two screens for that, so I can't really do that, I don't think. Oh, you know what I can do? I can type in the live chat. Yeah, let's do that. So Elon will be talking, and I'm going to be typing into the live chat if I have any comments. Okay. So yeah, that works great. Perfect. My mom messaged me. She's complaining about the ads. What the hell? Heck. Mm. Mm. It's so funny. I recommend people get YouTube Premium. YouTube Premium is a good investment. It also supports the channel. The more premium members I have, the better. Christopher is asking, do I need to gift a sub to your mom? So funny. She literally texted. She's like, just translated from Turkish. She goes, and it's like freaking past midnight over there. How are you? I was watching from YouTube today. I had 7 commercial breaks. Whatever. Ugh. All right. If you want to, Christopher says, tell her to contribute and stop freeloading. I agree. Let's put that on there. She's probably watching right now. All right. I recommend joining live chat, and to join live chat, it's only $2-3, something like that, for the YouTube membership. I kept it very, very low, and because I do want conversations in live chat, I appreciate when people join, and I'm going to be typing on there as I hear something material. So I'm going to basically just type in any material information that we find out on the earnings call, complementary to what we saw on the earnings release. I think this first try was great. I actually wouldn't change a thing. I wouldn't change a thing from what we did today. And yeah, thank you very much for being here. I appreciate it. How do I make this full screen? Not sure. Sorry. Eight minutes. 8 minutes. If I hide myself, do you guys still hear me? Test, test, 1, 2, 3. Can you still hear me? One, two, three, 1, 2, 3. Yes. Okay. Seven minutes to the earnings call. Tesla down 4.2% after hours. I think we have a record number of members now after today. YouTube is growing slowly but surely. Right now we have 1,870 subscribers and about a dozen members, I think. And this 1,870 figure needs to get to tens of thousands before we can be, I think 10,000 is contribution margin positive, 100,000 is gross margin positive. And then once I have 100,000 subscribers, 100,000 followers on X, and I think Patreon will probably just stay here for a while. So then we can talk about operating margin positive. But right now, the financials of Tesla Live is worse than Rivian, unfortunately. So kind of gives you. Oh, we just got one more subscriber, 1871. Six minutes. 6 minutes to go. 5 minutes and 30 seconds. Let's go. Let's go. You know, we can look at some headlines that came out so far. Tesla stock slumps after mixed earnings. Let's look at that. Affordable EVs on track for 2025. Tesla reported mixed. I can probably just make this. Let's see if this makes a change. It's supposed to be documented already. Okay. Tesla reported mixed second quarter results after the Bell likely a cheaper EV in the first half of 2025. Tesla also said its growth rate in 2025 will be notably lower, which they said already in the past one. So this is just superficial. Dan Ives said, addressing the delay on robotaxi day and the new timing will be important to hear on the conference call, as we believe a linchpin to Tesla reaching 1 trillion valuation, ultimately higher over the next year's contingent AI FSD story. Okay. Spotify up 12%. Lockheed up 6%. GE up 6%. Larry Ellison sold. Oh, there we go. All right. And then they're coming online. Can you guys hear the music? Let me know if you can hear the music coming from the Tesla Financial Results tab. Can you guys hear the music? Uh-oh. Okay. Crystal, okay. You all can hear it. Is there a delay? Quite a bit of delay, I guess. Can you hear me? 1, 2, 3. Test 1, 2, 3. 1, 2, 3. Can you hear both the music and me? Wow, look at this number going up. 4,400 people watching now. Hey, oh, Steve. All right, can you hear? Okay, perfect. So you can hear both me and the music. So we're all set to go. 2 minutes. 2 minutes. I'm going to put myself on mute, and I'm going to type in the live chat if there are any important material notes that come out. Okay?
Good afternoon, everyone, and welcome to Tesla's second quarter 2024 Q&A webcast. My name is Travis Axelrod, Head of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q2 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So to recap, we saw large adoption acceleration in EVs, and then a bit of a hangover as others struggle to make compelling EVs. So there have been quite a few competing electric vehicles that have entered the market, and mostly they have not done well, but they have discounted their EVs very substantially, which has made it a bit more difficult for Tesla. We don't see this as a long-term issue, but really as fairly short-term. And we still obviously firmly believe that EVs are best for customers and that the world is headed for a fully electrified transport, not just of cars, but also of aircraft and boats. Despite many challenges, the Tesla team did a great job executing, and we did achieve record quarterly revenues. Energy storage deployments reached an all-time high in Q2, leading to record profits for the energy business. And we're investing in many future projects, including AI training and inference, and a great deal of infrastructure to support future products. We won't get too much into the product roadmap here because that is reserved for product announcement events. But we are on track to deliver a more affordable model in the first half of next year. Really, by far, the biggest differentiator for Tesla is autonomy. And in addition to that, we have scale economies, and we're the most efficient electric vehicle producer in the world. So, anyway, while others are pursuing different parts of the AI robotic stack, we're pursuing all of them. This allows for better cost control, more scale, quicker time to market, and a superior product. Applying not just to autonomous vehicles, but to autonomous humanoid robots like Optimus. Regarding full self-driving and robotaxi, we've made a lot of progress with full self-driving in Q2, and with version 12.5 beginning rollout, we think customers will experience a step change improvement in how well supervised full self-driving works. Version 12.5 has 5 times the parameters of 12.4 and will finally merge the highway and city stacks. So the highway stack is still, at this point, is pretty old. So often the issues people encounter are on the highway, but with 12.5, we finally merged the 2 stacks. I still find that most people actually don't know how good the system is. And I would encourage anyone to understand the system better to simply try it out and let the car drive you around. One of the things we're going to be doing just to make sure people actually understand the capabilities of the car is when delivering a new car and when picking up a car for service, to just show people how to use it and just drive them around the block. Once people use it at all, they tend to continue using it. So it's very compelling, and then this, I think, will be a massive demand driver. Even unsupervised full self-driving will be a massive demand driver. And as we increase the miles between intervention, it will transition from supervised full self-driving to unsupervised full self-driving, and we can unlock massive potential in the fleet. we postponed the sort of robotaxi or the sort of product unveil by a couple months, where it's shifted to 10/10, so the 10th of October. And this is because I wanted to make some important changes that I think would improve the vehicle, the sort of the robotaxi, the main thing that we're going to show, and we're also going to show off a couple of other things. So moving it back a few months allowed us to improve the robotaxi, as well as add in a couple other things for the product unveil. We're also nearing completion of the south expansion of Giga Texas, which will house our largest training cluster to date. This will be an incremental 50,000 H100s plus 20,000 of our hardware 4 or AI5 Tesla AI computer. With Optimus, Optimus is already performing tasks in our factory, and we expect to have Optimus production version 1 in limited production starting early next year. This will be for Tesla consumption. It's just better for us to iron out the issues ourselves. But we expect to have several thousand Optimus robots produced and doing useful things by the end of next year in the Tesla factories. And then in 2026, ramping up production quite a bit. And at that point, we'll be providing Optimus robots to outside customers. That'll be production version 2 of Optimus. For the energy business, this is growing faster than anything else. We are really demand constrained rather than production constrained. So we're ramping up production in our US factory, as well as building Megapack factory in China that should roughly double our output. Maybe more than double, maybe triple potentially. So in conclusion, we're super excited about the progress across the board. We're changing the energy system, how people move around, how people approach the economy. The undertaking is massive, but I think the future is incredibly bright. I really just can't emphasize just the importance of autonomy for the vehicle side and for Optimus. Although the numbers sound crazy, I think Tesla producing at volume with unsupervised FSD, essentially enabling the fleet to operate like a giant autonomous fleet, and it takes the valuation, I think, to some pretty crazy number. ARK Invest thinks on the order of $5 trillion. I think they're probably not wrong. And long-term Optimus, I think, achieves a valuation several times that number. I want to thank the Tesla team for strong execution and looking forward to exciting years ahead.
Great. Thank you very much, Elon. And Vaibhav has opening remarks as well.
Thanks. As Elon mentioned, the Tesla team rose to the occasion yet again and delivered on all fronts with some notable records. In addition to those records, we saw our automotive deliveries go sequentially. I would like to thank the entire Tesla team for their efforts in delivering a great quarter. On the auto business front, affordability remains a top of mind for customers, and in response, in Q2, we offered attractive financing options to offset sustained high interest rates. These programs had an impact on revenue per unit in the quarter. These impacts will persist into Q3 as we have already launched similar programs. We're now offering extremely competitive financing rates in most parts of the world. This is the best time to buy a Tesla. I mean, if you're waiting on the sidelines, come out and get your car. We had a record quarter on regulatory credits, revenues, and as well. On net, our auto margins remained flat sequentially. It is important to note that the demand for regulatory credits is dependent on other OEMs' plans for the kind of vehicles they're manufacturing and selling, as well as changes in regulations. We pride ourselves to be the company with the most American-made cars and are continuing our journey to further localize our supply chain, not just in the US, but in Europe and China, as well for the respective factories. As always, our focus is on providing the most compelling products at a reasonable price. We have stepped up our efforts to provide more trims that have estimated range of more than 300 miles on a single charge. We believe this, along with the expansion of our supercharging network, is the right strategy to combat range anxiety. Since the revision of FSD pricing in North America, we've seen adoption rates increase meaningfully and expect this to be a driver of vehicle sales as the feature set improves further. Cost per vehicle declined sequentially when we remove the impact of Cybertruck. While we are experiencing material costs trending down, note that there is latency on the cost side, and such reductions would show up in the P&L when the vehicles built with these materials get delivered. Additionally, as we get into the second half of the year, it is important to note that we are still ramping Cybertruck and Model 3 and are also getting impacted by varying amounts of tariffs on both raw materials and finished goods. While our teams are working feverishly to offset these, unfortunately, it may have an impact on the cost in the near term. We previously talked about the potential of the energy business and now feel excited that the foundation that was laid over time is bearing the expected results. Energy storage deployments more than doubled, with contribution not just from Megapack, but also Powerwall, resulting in record revenues and profit for the energy business. Energy storage backlog is strong. As discussed before, deployments will fluctuate from period to period, with some quarters seeing large increases and others seeing a decline. Recognition of storage gigawatt hours is dependent on a variety of factors, including logistics timing, as we send units from a single factory to markets across the world, customer readiness, and in case of EPC projects on construction activities. Moving on to the other parts of the business, service and other gross profits also improved sequentially from the improvement in service utilization and growth in our collision repair business. The impact of our recent reorg is reflected in restructuring and other on the income statement. Just to level set, this was about $622 million of charge, which got recorded in the period. And I want people to remember that we've called it out separately on the financials. Sequentially, our operating expenses, excluding such charges, reduced despite an increase in spend for AI-related activities and higher legal and other costs. On the capex front, while we saw a sequential decline in Q2, we still expect the year to be over $10 billion in capex as we increase our spend to bring a 50K GPU cluster online. This new cluster will immensely increase our capabilities to scale FSD and other AI initiatives. We reverted to positive free cash flow of $1.3 billion in Q2. This was despite restructuring payments being made in the quarter, and we ended the quarter with over $30 billion of cash and investments. Once again, we've begun the journey towards the next phase for the company, with the building blocks being placed. It will take some time, but will be a rewarding experience for everyone involved. Once again, I would like to thank the entire Tesla team for their efforts.
Great. Thank you very much, Vaibhav. Now let's go to investor questions. The first question is, what is the status on the Roadster?
With respect to the Roadster, we've completed most of the engineering, and I think there's still some upgrades we want to make to it, but we expect to be in production with the Roadster next year.
Great.
It'll be something special, like a Hall of Famer, I think.
Fantastic. The next question is about timing of robotaxi event, which we've already covered. So we'll go to the next question. When do you expect the first robotaxi ride?
I guess that's really just a question of when do I expect the first, when can we do unsupervised full self-driving? It's difficult, obviously, my predictions on this have been overly optimistic in the past. So I mean, based on the current trend, it seems as though we should get miles between interventions to be high enough that it should be far enough in excess of humans that you could do unsupervised possibly by the end of this year. I would be shocked if we cannot do it next year. So next year seems highly probable to me based on point simply plus the points of the curve of miles between intervention. That trend exceeds humans for sure next year. So yeah.
Thank you very much. Our third question is, the Cybertruck is an iconic product that wows everyone who sees it. Do you have plans to expand the cyber vehicle lineup to a cyber SUV or cyber van?
I think we want to limit product announcements to when we have a specific product announcement event rather than earnings calls.
Great, thank you. Our next question is, what is the current status of 4680 battery cell production and how is the ramp up progressing?
Yeah. 4680 production ramped strongly in Q2, delivering 51% more cells than Q1, while reducing COGS significantly. We currently produce more than 1,400 Cybertrucks of 4680 cells per week, and we'll continue to ramp output as we drive costs down further towards the cost parity target we set for the end of the year. We've built our first validation Cybertruck with dry cathode process made on our mass production equipment, which is a huge technical milestone, and we're super proud of that. We're on track for production launch with dry cathode in Q4, and this will enable cell costs to be significantly below available alternatives, which was the original goal of the 4680 program.
Great.
Thank you very much. The next question is, any update on Dojo?
Yeah, so Dojo, I should preface this by saying I'm incredibly impressed by NVIDIA's execution and the capability of their hardware. And what we are seeing is that the demand for NVIDIA hardware is so high that it's often difficult to get the GPUs. And there just seems this, I guess I'm quite concerned about actually being able to get state-of-the-art NVIDIA GPUs when we want them. And I think this therefore requires that we put a lot more effort on Dojo in order to ensure that we've got the training capability that we need. So we are going to double down on Dojo, and we do see a path to being competitive with NVIDIA with Dojo. And I think we kind of have no choice because the demand for NVIDIA is so high, and it's obviously their obligation essentially to raise the price of GPUs to whatever the market will bear, which is very high. So I think we've really got to make Dojo work, and we will.
Great. The next question is, what type of accessories will be offered with Optimus?
Optimus is intended to be a generalized humanoid robot with a lot of intelligence. So it's like saying, what kind of accessories would be offered with a human? It's just really intended to be able to be backwards compatible with human tasks. So it would, use any accessories that a human would use. Yeah.
Thank you. The next question is, do you feel you're cheating people out of the joys of owning a Tesla by not advertising?
We are doing some advertising. So,
Yeah.
want to say something?
Yeah, I'll say something. Our fundamental belief is that we need to be providing the best products at a reasonable price to the consumers. Just to give you a fact, in US alone in Q2, over 2/3 of our sales deliveries were to people who had never owned a Tesla before, and which is encouraging. We've spent money on advertising and other awareness programs, and we have adjusted our strategy. We're not saying no to advertising, but this is a dynamic play, and we know that we have not exhausted all our options, and therefore plan to keep adjusting in the later half of this year as well.
Great, thank you very much. The next question is on energy growth, which we already covered in opening remarks. So we'll move on to the next one. What is the updated timeline for Giga Mexico, and what will be the primary vehicles produced initially?
Well, we currently are paused on Giga Mexico. I think we need to see just where things stand after the election. Trump has said that he will put heavy tariffs on vehicles produced in Mexico, so it doesn't make sense to invest a lot in Mexico if that is going to be the case. So we kind of need to see where things play out politically. However, we are increasing capacity at our existing factories quite significantly. And I should say that the cyber taxi, robotaxi, will be produced here at our headquarters at Giga Texas.
All right, thank you.
Sorry, as will Optimus towards the end of next year for Optimus production version 2. The high volume version of Optimus will also be produced here in Texas.
Great, thank you. Just a couple more. Is Tesla still in talks with an OEM to license FSD?
There are a few major OEMs that have expressed interest in licensing Tesla or Tesla Full Self-Driving, and I suspect there will be more over time, but we can't comment on the details of those discussions.
All right, thank you. And the last one, any updates on investing in xAI and integrating Grok into Tesla software?
I should say that Tesla is learning quite a bit from xAI. It's been actually helpful in advancing full self-driving and in building up the new Tesla data center. Regarding investing in xAI, I think we'd need to have a shareholder approval of any such investment. But I'm certainly supportive of that if shareholders are. But I think we need to vote on that. And I think that there are opportunities to integrate Grok into Tesla software. Yes.
All right, thank you very much. And now we will move on to analyst questions. The first question comes from Will Stein from Truist. Will, please go ahead and unmute yourself.
Great, thanks so much for taking my question. And this relates a little bit to the last one that was asked. Elon, I share your strong enthusiasm about AI, and I recognize Tesla's opportunity to do some great things with the technology, but there are some concerns I have about Tesla's commercialization, and that's what I'd like to ask about. Specifically, there were some news stories through the quarter that indicated that you redirected some AI compute systems that were destined for Tesla instead to xAI, or perhaps it was to X, I'm not sure. And similarly, a few quarters ago, if you recall, I asked about your ability to hire engineers in this area, and you noted that there was a great desire for some of these engineers to work on projects that you were involved with, but some of them weren't at Tesla. They were instead at xAI or perhaps even X again. So the question is, when it comes to your capital investments, your AI R&D, your AI engineers, how do you make allocation decisions among these various ventures, and how do you make Tesla owners comfortable that you're doing it in a way that really benefits them? Thank you.
Yeah, I mean, I think you're referring to a very like an old article regarding GPUs. I think that's like six or 7 months old. Tesla simply had no place to turn them on. So it would have been a waste of Tesla capital because we would just have to order H100s and have no place to turn them on. So it was just, this wasn't a, let's pick xAI over Tesla. There was no, the Tesla data centers were full. There was no place to actually put them. We've been working 24/7 to complete the south extension on the Tesla Gigafactory here in Texas. The south extension is what will house the 50,000 H100s, and we're beginning to move the H100 server racks into place there. But we needed that to be complete physically. You can't just order GPUs and turn them on but no, you need a data center. It's not possible. So I want to be clear that was in Tesla's interest, not contrary to Tesla's interest. Does Tesla know good to have GPUs that can't turn on? The split second that South Extension is able to take GPUs, which is really just this week, we are moving GPUs in there and we'll bring them online. With regard to XAI, there are people that only want to work on AGI. So what I was finding was that when trying to recruit people to Tesla, they were only interested in working on AGI, not Tesla specific problems, and they want to do a startup. So it was a case of either they go to a startup or and I'm involved, or they do a startup and I'm not involved. Those are the two choices. This wasn't they would come to Tesla. They were not going to come to Tesla under any circumstances. Yeah.
Yeah, I mean, I would even add that, AI is a broad spectrum, and there are a lot of things which, we are focused on full self-driving as Tesla and also Optimus. But there's the other spectrum of AI which we're not working on, and that's the kind of work which other companies are trying to do, in this case, XAI. So you have to keep that in mind, that it's a broad spectrum. It's not just one specific thing.
Yeah, and once again, I want to just repeat myself here. I tried to recruit them to Tesla, including to say, like, you can work on AGI if you want, and they refused. Only then was XAI created.
I really appreciate that clarification. If I can ask one follow-up, it relates to the new vehicles that you're planning to introduce next year. I understand this is not the venue for product announcements, but when we think about the focus, I've heard on the one hand that the focus is on cost reduction. On the other hand, you also said that the Roadster would come out. Should we expect other, maybe more limited variants, like similar to the cars that you make today, but with some changes or improvements or different, some other variability in the form factors? Should we expect that to be a significant part of the strategy in the next year or two?
I don't want to get into the details of product announcements, and we have to be careful of the Osborne effect here. So, if you start announcing some great thing, it affects our near-term sales. We're going to make great products in the future, just like we have in the past. End of story.
Great. The next question comes from Ben Kallo from Baird. Ben, please go ahead and unmute yourself.
Hi, thanks for taking my question. When we think about revenue contribution and with energy growing so quickly and, Optimus on the come, how do we think about, the overall segments longer term? And then do you think that auto revenue will fall below 50% of your overall revenue? And then my follow-up is just on the last call, you talked about distributed compute on your new hardware. Could you just update us and talk a little bit more about that, the timeline for it, and how you would reward customers for letting you use their compute power in their cars? Thanks.
Yeah, I mean, as I've said a few times, I think the long-term value of Optimus will exceed that of everything else at Tesla combined. So it's simply, if you simply consider the usefulness, utility of a humanoid robot that can do pretty much anything you ask of it, I think everyone on Earth is going to want one. There's 8 billion people on Earth, so that's 8 billion right there. Then you've got all of the industrial uses, which is probably at least as much, if not way more. So I suspect that the long-term demand for general-purpose humanoid robots is in excess of 20 billion units. Um, and Tesla has the most advanced humanoid robot in the world, and is also very good at manufacturing, which these other companies are not. And we've got a lot of experience the most experience. We're the world leaders in real world AI. So we have all of the ingredients. I think we're unique in having all of the ingredients necessary for large scale, high utility, generalized humanoid robots. That's why, my rough estimate long term is in accordance with the ARK Invest analysis of a market cap of on the order of 5 trillion for maybe more for autonomous transport, and it's several times that number for general purpose humanoid robots. At that point, I'm not sure what money even means, but in the benign AI scenario, we're headed for an age of abundance, where there is no shortage of goods and services. Anyone can have pretty much anything they want. It's a very wild future we're headed for.
On the distributed compute.
Yeah, distributed compute. That seems like a pretty obvious thing to do. I think where the distributed compute becomes interesting is with our next generation Tesla AI chip, which is hardware 5, or what we're calling AI 5, which is from the standpoint of inference capability comparable to a B200, an NVIDIA B200. And we're aiming to have that in production at the end of next year and scale production in 26. So it just seems like even if you've got autonomous vehicles that are operating for 50 or 60 hours a week, there's 168 hours in a week. So you have somewhere above, I think, 100 neural net computing. I think we need a better word than GPU, because GPU means graphics processing unit. So there's 100 hours plus per week of AI inference compute from the fleet, from the vehicles, and probably some percentage from the humanoid robots, that it would make sense to do distributed inference. And if there's a fleet of, at some point, 100 million vehicles with AI 5 and beyond, because you have AI 6 and 7 and whatnot, and there may be billions of humanoid robots, that is just a staggering amount of inference compute that could be used for general purpose computing. It doesn't have to be used for the humanoid robot or for the car. So I think that's a pretty obvious thing to say, like, well, it's more useful than having to do nothing.
All right, thank you. The next question comes from Alex Potter from Piper. Alex, please go ahead and unmute yourself.
Perfect, thanks. Wanted to ask a question on FSD licensing. You mentioned that in passing previously. Was just wondering if you can elaborate maybe on the mechanics of how that would work. I guess presumably this would not be some sort of simple plug and play proposition. Presumably an OEM would need, I don't know, several years to develop its own vehicle platform that's based on FSD. I imagine they would need to adopt Tesla's electrical architecture, compute, sensor stack. So correct me if I'm sort of misunderstanding this, but if you had a cooperative agreement of some kind with another OEM, then presumably it would take you several years before you'd be able to recognize licensing revenue from that agreement. Is that the right way to think about that?
Yes. The OEMs do not move fast. There's not really a sensor suite. It's just cameras. But they would have to integrate our AI computer and have cameras with a 360-degree view. And at least the gateway, like what talks to the internet and communicates with the Tesla system, with that, you need kind of a gateway computer too. So it's really a gateway computer with the cellular and Wi-Fi connectivity, the TSLA AI computer, and 7 cameras, or enough cameras to get a 360-degree view. But this will, given the speed at which the auto industry moves, it would be several years before you would see this in volume.
Okay, good. That's more or less what I expected. So then the follow-up here is, if you did sign an FSD licensing agreement with another automaker, when do you think you would disclose that? Would you do it right when you sign the agreement, or only after that multiple years has passed and the vehicle is ready to be rolled out?
I think it depends on the OEM. I guess we'd be happy either way.
Yeah, it depends on, what kind of arrangement we enter into. A lot of those things we've not ironed those out yet. So we'll make that determination as and when we get to that point.
And the kind of deals that are obviously relevant are only if, some OEM is willing to do this in 1 million cars a year or something significant. It's not if it's like 10,000 or 100,000 cars a year. We could just make that ourselves.
All right, thank you. The next question comes from Dan Levi from Barclays. Dan, please go ahead and unmute yourself.
Hi, good evening. Thanks for taking the questions. First, wanted to start with a question on Shanghai. You've leveraged Shanghai as an export center, really due to its low cost, and that makes sense. Maybe you can just give us a sense of how the strategy changes, if at all, given the implementation of tariffs in Europe. Also, to what extent your import of batteries from China into the US, how that might change given the tariffs. Thank you.
Yeah, I think I covered some part of it in my opening remarks, but just to give you a little bit more, just on the tariff side, the European authorities did sample certain other OEMs in the first round to establish the tariffs for cars being imported from China into Europe. While we were not picked up in our individual examination in the first round, they did pick us up in the second round. They visited our factory. We worked with them, provided them all the information. As a result, we are adjusting our import strategy out of China into Europe. One other thing to note is in Q2 itself, we started building right-hand Model Ys out of Berlin, and we also delivered it in UK. And, we're adjusting as needed, but we will keep adjusting. We're still importing Model 3s into Europe out of Shanghai. And, we are still evaluating what is the best alternate to manage all this. Just on the examination by the European authorities, like I said, we cooperated with them well. We are confident that we should get a better rate than what they have imposed for now. But this is literally evolving, and we are adjusting as fast as we can with this. I would also add that, because of this, you've seen the impact that Berlin is doing more imports into places like Taiwan, as well as, UK I just mentioned. So it will keep changing, and we will keep adapting as we go about it.
Great.
Thanks. Yeah, thank you. As a follow-up, I wanted to ask about the robotaxi strategy, and specifically the shareholder deck here notes that the release is going to be one of the gating factors is regulatory approval. So maybe you could help us understand, which regulations specifically are the ones that we should be looking for. Is it FMVSS that's standard? And then, to what extent does the strategy shift you've done with FSD more of a nationwide, no boundary approach? Is the robotaxi approach one that's more geofence, so to speak, and is more driven by a state-by-state approach?
I mean, our solution is a generalized solution. Like what everybody else has. If you see it like Waymo and whatnot, they have a very localized solution that requires high density mapping. It's quite fragile. So, their ability to expand rapidly is limited. Our solution is a general solution that works anywhere. It would even work on a different Earth. So if you rendered a new Earth, it would work on a new Earth. So there's capability. I think in our experience, once we demonstrate that something is safe enough or significantly safer than human, we find that regulators are supportive of deployment of that capability. It's difficult to argue with if you've got a large number of, if you've got billions of miles that show that in the future unsupervised FSD is safer than human. What regulator could really stand in the way of that? They're morally obligated to approve. So I don't think regulatory approval will be a limiting factor. I should also say that the self-driving capabilities that are deployed outside of North America are far behind that in North America. So with version 12.5 and maybe it's 12.6, but pretty soon we will ask for regulatory approval of the Tesla supervised FSD in Europe, China, and other countries. And I think we're likely to receive that before the end of the year.
Thank you.
Which will be a helpful demand driver in those regions, obviously.
Thank you.
Just to add to that, Travis, in terms of as Elon said, in terms of regulatory approval, the vehicles are governed by FMVSS in the US, which is NHTSA, which is the same across all 50 states. The road rules are the same across all 50 states. So creating a generalized solution gives us the best opportunity to deploy in all 50 states reasonably. Of course, there are state and even local, municipal level regulations that may apply to, being a transportation company or deploying taxis. But, as far as getting the vehicle on the road, that's all federal, and that's very much in line with what, Elon was just suggesting about the data and the vehicle itself.
And to add to the technology point, the end-to-end network basically makes no assumption about the location. Like you could add data from different countries and it would just perform equally well there. There's almost close to zero US specific code in there. It's all just the data that comes from the US.
Yeah, to that end, Ashok, it's we can go as humans to other countries and drive with some reasonable amount of assessment in those countries. And that's how you design the FSD software.
Yeah, exactly.
Great, thanks guys. The next question comes from George from Canaccord. George, please go ahead and unmute yourself.
Hi, everyone. Thank you for taking my questions. Maybe just to expand on the regulatory question for a second, and I could be comparing apples and oranges, but GM canceled their pedalless, wheelless vehicle. And according to the company this morning, their decision was driven by uncertainty about the regulatory environment. And from what we understand, and again, maybe I'm wrong here, but the robo-taxi that has been shown, at least in images of the public, is also pedalless and wheelless. Is there a different regulatory concern just if you deploy a vehicle like that doesn't have pedals or a wheel, and may that be different from just regular FSD on a traditional Tesla vehicle? Thank you.
Well, obviously, the real reason that they canceled it is because GM can't make it work, not because of regulators. They're blaming regulators. That's misleading of them to do so, because Waymo is doing just fine in those markets. So it's just that their technology is not up to par.
Right. And maybe just as a follow-up, I think you mentioned that FSD take rates were up materially after you reduced the price. Is there any way you can help us quantify what that means exactly? Thank you.
Yeah, I mean, we've shared we've seen a meaningful increase. I don't want to get into specific because we started from a low base, but we are seeing encouraging results. And the key thing here is, like Elon said, you need to experience it because words can't describe it till the time we actually use it. And that's why we are trying to make sure that every time a car is getting delivered, people are being showed how this thing is working, because when you see it working, you realize how great it is. I mean, just to give you one example, so again, there's a biased example, but I have a more than 20-mile commute into the factory almost every day. I have 0 interventions on the latest stack, and the car just literally drives me over. And especially with the latest version, wherein we're also tracking your eye movement, the steering wheel nag is almost not there, as long as you're not wearing sunglasses.
Well, we're fixing the sunglasses thing. It's coming soon. So you will be able to drive. You'll be able to have sunglasses on and have the car drive.
Yeah.
But there's a fair number of times I've talked with smart people who like live in New York or maybe downtown Boston and don't ever drive, and then are asking me about FSD. And I'm like, you can just get a car and try it. If you're not doing that, you have no idea what's going on.
Thank you. The next question comes from Pierre from New Street. Pierre, please unmute yourself.
Hey guys, thank you for taking my question. So it's on robotaxi again, and I completely get it that with a universal solution, we will get like regulatory approval. We get there eventually, clicking up miles and compute, etc. And my question is more, how you think about deployments? Because I'm thinking once you have a car that can drive everywhere, that can replace me, it can replace a taxi. But then to do the ride-hailing service, you need a certain scale. And that means a lot of cars on the road. And so you need an infrastructure to just maintain the cars, take care of them, etc. And so my question is, are you already working on that? Do you have already an idea of what like your plan to deploy looks like? And is that like a Tesla only plan, or are you looking at partners, local partners, global partners to do that? And I'll have a quick follow-up.
Yeah, this would just be the Tesla network. You just literally open the Tesla app and summon a car, and we send a car to pick you up and take you somewhere. We'll have a fleet that's, I don't know, on the order of 7 million that are capable of autonomy soon. In the years to come, it'll be over 10 million, then over 20 million. This is immense scale. And the car is able to operate 24/7, unlike the human driver. So the capability to, like, there's this basically instant scale with a software update. And now this is for a customer-owned fleet. So you can think of that as being a bit like Airbnb. Like, you can choose to allow your car to be used by the fleet, or cancel that and bring it back. It can be used by the fleet all the time. It can be used by the fleet some of the time, and then Tesla would share on the revenue with the customer. But you can think of the giant fleet of Tesla vehicles as like a giant sort of Airbnb equivalent fleet, Airbnb on wheels. Then, in addition, we would make some number of cars for Tesla that would just be owned by Tesla and be added to the fleet. I guess that would be a bit more like Uber. But this would all be the Tesla network. And there's an important clause we've put in every Tesla purchase, which is that the Tesla vehicles can only be used in the Tesla fleet. They cannot be used by a third party for autonomy.
Okay. And And do you think that scales like progressively, so you can start in a city with just a handful of cars and you grow the number of cars over time, or do you think there is like a critical mass you need to get to be able to offer like a service that is of competitive quality compared to what like Uber would be typically delivering already?
I guess maybe I'm not conveying this correctly. The entire Tesla fleet basically becomes active. This is obviously, maybe there's some number of people who don't want their car to earn money, but I think most people will. It's instant scale.
Thank you. Our next question comes from Colin from Oppenheimer. Colin, please unmute yourself.
Sorry about that, guys. I've got two questions around energy storage. With the tight supply and the stationary storage, can you talk about your pricing strategy and how you're thinking about saturation in given geographies, given that some of these larger systems are starting to shift wholesale power markets in a pretty meaningful way quickly?
So yeah, we are working with a large set of players in the market, and our pipeline is actually pretty long, and there's actually a long end in terms of where you enter into a contract to where delivery starts happening. And so far we have good pricing leverage, and I'll have Mike chime in on this too.
Yeah, there's a lot of competition from Chinese OEMs, just like there is in the vehicle space. So we're in close contact with our customers and making sure that we're remaining competitive in where they're needing to be competitive to secure contracts to sell power and energy in the markets. We had a really strong contracting quarter and continue to build our backlog for 2025 and 2026. So we feel pretty good about where we are in the market. We realize that competition is strong, but we have a pretty strong value proposition with offering a fully integrated product with our own power electronics and site level controls. So
yeah, and again, the aspect which people do not fully understand is that there's also a whole software stack which comes with our Megapack.
Right.
And that is a unique proposition which we have, which is only available to us, and we're using it with other stuff too. But that gives us a much more of an edge as compared to the competition.
Yeah, we find customers that they can sort of put together a hodgepodge solution, and then sometimes they'll pick that solution, and then that doesn't work, and then they come back to us.
Yeah, and we're not really seeing saturation on a global scale. There's little pockets of saturation in different markets, but we're more seeing that there's markets opening up given demand on the grid just continues to increase more than anyone expects. So that just opens up markets, really across the world in different pockets.
Yeah, just even on the AI compute side, right? These GPUs are really power hungry, and the amount of new pipeline which we're getting for people for data center backup and things like that is increasing at a pretty large scale.
Yeah.
Thanks so much. And then the follow-up here is around the 4680 process technology, and the roll-to-roll process. There's some news around your equipment suppliers. Can you talk about how far along you are in potentially qualifying an incremental supplier around some of those critical process technology steps?
Yeah, I can talk about that. As you're probably referring to the lawsuit that we have with one of our suppliers. Look, I don't think this is going to affect our ability to roll out 4680. We have very strong IP position in the technology, and the majority of the equipment that we use is in-house designed, and some of it's in-house built. And so we can take our IP stack and have someone else build it if we need to. So that's not really a concern right now.
Yeah, I think people don't understand just how much demand there will be for grid storage. They really just the people, I think, are underestimating this demand by probably orders of magnitude. So that the actual total energy output of, say, the US grid is, if the power plants can operate at steady state, is at least 2 to 3 times the amount of energy it currently produces. Because there are huge gaps. There's a huge difference in the from peak to trough in terms of energy or power generation. So in order for a grid to not have blackouts, it must be able to support the load at the worst minute of the worst day of the year, the coldest or hottest day, which means that for the rest of the time, the rest of the year, it's got massive excess power generation capability, but it has no way to store that energy. Once you add battery packs, you can now run the power plants at steady state. Steady state means that basically any given grid anywhere in the world can produce, in terms of cumulative energy in the course of a year, at least twice what it is currently producing. In some cases, maybe 3 times.
All right, thank you.
This is a very profound thing.
Great. Thank you, Elon. The next question comes from Colin Langan from Wells Fargo. Colin, please unmute yourself.
Oh, great. Thanks for taking my questions. Do you hear me?
Yeah.
Yeah.
Oh, okay, good. Sorry. I guess we're going to ask, if Trump wins, there's a higher chance that IRA could get cut. I think, Elon, you had commented online that Tesla doesn't survive on EV subsidies. But when Tesla lose a lot of support, if IRA goes away, I think Model 3 and Y get IRA help for customers, and I think your batteries get production tax credits. So just one, can you clarify if IRA ends, would it be a negative for your profitability in the near term? Why might it not be a negative? And then, any framing of the current, support you get IRA related.
I guess that there would be like some impact, but I think it would be devastating for our competitors, but and it would hurt Tesla slightly. But long term probably actually helps Tesla. That would be my guess. But and I've said this before on these calls. The value of Tesla overwhelmingly is autonomy. These other things are in the noise relative to autonomy. So I recommend anyone who doesn't believe that Tesla will solve vehicle autonomy should not hold Tesla stock. They should sell their Tesla stock. If you believe Tesla will solve autonomy, you should buy Tesla stock. And all these other questions are in the noise.
Yeah, I mean, I'll ask this just to clarify a few things, that at the end of the day, when we are looking at our business, we've always been looking at it whether or not IRA is there. And we want our business to grow healthy without having any, subsidies coming in, whichever way you look at it. And that's the way we have always modeled everything. And that is the way internally also, even when we're looking at battery costs, yes, there are manufacturing credits which we get, but we always drive ourselves to say, okay, what if there is no IRA benefit? And how do we operate in that kind of an environment? And like Elon said, we definitely have a big advantage as compared to our competition on that front. We've delivered it, and you can see it in the numbers over the years. So there is, you cannot ignore the fundamental sides of the business. And then on top of it, once you add autonomy to it, like Elon said, it becomes meaningless to even think about the short term.
Okay. I think that's unfortunately all the time we have for today. We appreciate all of your questions. We look forward to talking to you next quarter. Thank you very much and goodbye.
Thanks, man.
All right. Hello, everybody. Welcome back. Welcome back. All right, what do you all think of the presentation? Any specific observations, please leave in the live chat. Let me go through a couple of things here. I think, let me just see real quick. Omar says, let's do a space real quick. All right. I think we can probably roll into space from here without. Steve says XAI stuff could be interesting. All right, let me just open the space real quick, and then I can pipe that in here too. All right. Give me 1 second. Steve says XAI stuff could be interesting if Tesla invests, acquires. Yeah, it could be. I don't think an acquisition is likely, but I think some sort of investment, maybe. Space failed to start. Let me just try again. Let's find space inside. Give me 1 second. Trying a couple of different things here. All right, let me try one more time. That's weird. I wonder if it's because I'm logged in here too. All right, here we go. And StreamYard makes it so easy. It's great. I highly recommend StreamYard if you guys are gonna ever. Now I'm going to share screen. I'm gonna mute myself. Omar, how are you? The logistics are fine. Okay. Can people please let me know? Ooh, hold on. All right. I think this should be good now. Can people in X please let me know? Give me a thumbs up if you can hear me. And on YouTube, please let me know if you can hear us. So I had my first YouTube exclusive coverage, which went well. That was cool. And okay, great. So X can hear us and YouTube can hear us. Perfect. All right, Omar, what'd you think of the call?
Yeah, it wasn't exactly the best call performance. I thought it was a pretty weak performance on the earnings call itself. It kind of was like, you know, it sounded a little kind of unprepared. They're like, huh? Yeah, I think autonomy, but so wasn't really reassuring. I think the regulatory credit number in particular was not something that Wall Street received positively. But we did get some tidbits on the deck and on the call that I thought were pretty positive. More than anything, of course, FSD 12.5 is just performing phenomenally. I think that this is going to be material as we get into Q3 and Q4, although it doesn't seem to be showing up right now. They didn't break out the FSD users at all. We're at about 1.6 billion miles for FSD. That means the rate of miles added is about 20% of what it was during the free trial period. So that kind of gives you a sense of how many people converted in terms of miles. It's not users, but it's miles. And I've updated my FSD tracker website, fsdmiles.com. Then, 4680, they say they have a dry cathode at the prototype level. So both anode and cathode with dry coating, that's pretty significant. They reaffirmed that they are going to be ready to start producing a cheaper model in the start of next year, which just seems crazy to me. I mean, we've never seen Tesla have a new vehicle that's about to start production that they haven't said anything about. So they mentioned that the Cybercab event, which is going to be on 10/10, is going to have a couple more things. So I wouldn't be surprised to see some other products, maybe those affordable models actually make an appearance, given that they would be just a few months away from production. And perhaps the most telling comment of all, he said, well, we don't want to Osborne ourselves. What could they have that they need to be worried about Osborning themselves? I think there potentially is a very major new product here that is just completely under wraps. So, overall, I think the business is doing pretty well. We had a $600 million restructuring charge in the quarter. We also had 600 million in AI infrastructure spend. And then we also had, of course, the regulatory credits at a much higher level than usual. So, all things considered, I think it's okay. The subvented loan rates did impact auto margins significantly. I think that auto gross margin number was not as great as people would like to see. But overall, the business is doing fine. The energy business is doing great. As long as the sky isn't falling and they're progressing on their AI efforts, I'm super happy. So, I think I see this as really something where the market's understanding hasn't caught up to what we're seeing here with 12.5. And I would hope that you start to actually in the third quarter and fourth quarter be able to tell a story about take rates increasing, users increasing. They say they did notice a little bump, but they said we're starting from a small base, so we don't want to give you any concrete figures, meaning, it might not continue growing at that same rate. But if they can tell a story about the number of users growing, they said they actually see auto sales increasing as a result of this, which I agree with. And they mentioned that they have a line of sight into regulatory approval for FSD supervised into other markets like Europe and China before the end of the year. So if they can achieve that of before the end of the year, getting FSD supervised into one additional market, that's going to be huge because, of course, their ability to monetize all this hard work that they've been doing is dependent on actually being able to offer the product in these various markets. And he mentioned that there's zero US specific code for FSD. So overall, not really a great call, not really a great quarter, but not exactly the sky is falling situation that the Bears painted either with these subvented loan rates. So I think, just looking at FSD, looking at the product pipeline, it looks pretty exciting. Looking at rates coming down, it looks pretty exciting. And I think the worst is kind of behind us for Tesla. He also kind of made an interesting comment about the EV hangover. And I think that the business is sort of facing a headwind of this EV hangover, where these EVs came to the market and they did so poorly that they're now being discounted at insane prices to move the inventory off the lot. We saw it with, for example, some of these EVs that have $15,000, $20,000 incentives. Companies like Fisker that have to just offload all their product at huge discounts because they're going bankrupt. I mean, you even saw people leasing a Nissan Leaf for $20 a month, right? So, as Elon said, this isn't really a permanent situation. We don't expect this to last forever because they're not producing more of these EVs. But it's really kind of a hangover situation that we're going to get through. And that's making the auto business look not as bright as it really is. As we get through this hangover and we see rates come down, I think the profitability of the core business is probably going to improve in a way that few people are really expecting.
Thank you, Omar. I think that's a pretty good summary. And I have a few other things to say too, but let's start with Kubus. Kubus, go ahead.
I'm just still right now. Let me go out. Hi guys. Daniel, I used to be with you guys 2 months ago, exactly 3 months ago, when Tesla was for 160, 170. I was asking, what's going on? Why is so bad? What has changed, in your opinion, since then? 6 months later, I'm seeing a few things. First of all, a very important market, in my opinion, for Tesla, China. Tesla is losing. Europe, we are losing. USA, it's not going well. Why I see hope? Quick question. What, FSD? I'm not buying that. FSD, he promised to us over 10 years ago. So we can buy words from the CEO, from the brilliant guy, but at the end, we are talking about the numbers. The numbers are tragic. Let's be honest. Tesla is losing the market all over the world, especially in China, where we have really high competition. And saying and telling people that Cybertruck is selling better than Ford and Rivian, that's crazy.
Okay. Do you have a question?
Yeah. Where is the hope that this company can sell more
Okay,
cars?
thank you.
And
Omar, where's the hope that the that the company can sell more cars?
FSD 12.5.
Thank you. Yoda, what do you think of the earnings?
Yeah, I'm most excited about how on the earnings call, two things. Dojo is so back. I think Elon sees a path now. And then the second thing is just the timing of when FSD will achieve unsupervised. I think the timeline he said is hopefully by the end of this year. But likely worst case, he'd be shocked if it isn't next year.
He said that many times, Yoda. Come on. So what gives you confidence that this is the time?
Well, we're skipping FSD 12.4, going to 5. I think this is key because he said that, people don't appreciate that it's going to be instant scale, right? So when 12.5 or the future iteration 6.9 comes out, it's going to get rolled out. And this actually means that I think hardware 3 is capable, because he stressed that this is for the entire fleet. So hardware 3 is capable of becoming added to the Tesla network.
Omar, what went through your mind? Actually, let's go to Ryan first. Ryan, what'd you think of the call? Can you guys hear? Yeah, go ahead, Ryan.
Yeah, I think there's a propensity to see it as like it either is positive or therefore it's negative. I see this as a pretty neutral call. I mean, obviously, like there's no real fodder for consumers. There's not like a clear this is coming tomorrow. I mean, I think Omar is right that sure 12.5 is another positive iteration, but there's not clear new products to buy. There's not like everything is looked forward to next year. And even true unsupervised FSD is next year. So for investors, yes, I think it's great that they're pursuing additional markets for supervised FSD that should unlock additional revenue. I don't know how massive, and Tesla does make it difficult to interpret how massive that is. So in my mind, this was a little bit of we're at a good steady state, growth is good, but we don't have much to communicate at this time for major exciting updates. So as a result, I think I'm left feeling a little bit disappointed, but there's no real, like in my mind, there's very few things to look at that are actually negative. They're just not super positive.
My good life.
Yeah, so I listened to the earnings call, and as you've pointed out before, I've been a skeptic of Tesla's ability to achieve this, and just more so, I think, based on the timing of their ability to achieve it. I think it's always been, obviously, as Elon's mentioned, he's definitely overpromised and under-delivered. That's his history. But to be honest, I think I'm becoming more optimistic that they're actually going to achieve full autonomy.
Oh,
And
baby. Here we
I
go.
actually,
Here we go. He bought calls. Did you buy calls?
no, I have no position. I don't know that I'll even take a position, even if I am increasingly confident on their ability
So
to
what
achieve it.
changed? So why do you think they're going to achieve autonomy now?
I think their approach in the way that they've approached it is the right approach with the neural networks. And I think AI is obviously still, I think people can't quantify the rate of step change improvement that AI allows companies to make. And I think now what I will say is on the call, and I think the previous speaker mentioned Dojo and how Elon mentioned that, he's seen a need for Dojo in the future, that, they're going to start to focus more on delivering that. I think that's more because obviously the constraint of all of these NVIDIA GPUs, as well as, the pricing power that they're starting to get because of that constraint, it's kind of making it a necessity for them to be able to accelerate the future that they're trying to achieve. But I guess like I'm starting to see the possibility of them actually becoming.
Okay, good. Well, let's hear from the Yoda, and then after that we'll go to Motherhead.
Hey, my good life. I was wondering if you have kids or relatively young kids, and if so, do you think the future for them will be manual driving or autonomous driving?
Yeah, I do have two kids, 3 and 6 years old. So I would hope by the time they are of driving age that we'd reach autonomy. Now, some questions I still have, at least as it relates to autonomy, are: is this going to be ubiquitous, or is it going to be, this winner take all market that obviously Tesla and Tesla shareholders are hoping for? That's certainly still an unknown for me, but I think autonomy, it seems like it's going to be solved. certainly in the next 10 years.
And as a parent,
Okay.
sorry, just a quick follow-up. As a parent, would you like them to be on roads with distracted drivers, drunk drivers, or potentially being a distracted driver themselves? And if you had to purchase a vehicle for them or put them in a car, what kind of a car would you want to put them in?
Well, I'm still cautious about putting them in a car that is unsupervised, or I would hope to be in the car with them at this point, but certainly one that's controlled by supercomputers, if it's proven to be much more safe than a human driver. But I don't think we're at that point yet. So I obviously wouldn't risk their lives on whatever version we're on right now. I still think is not something I put my kids in.
Thank you. Motorhead, let's get from you all the negatives, get them out of your system, and then we're going to go to Omar.
Okay. Well, first of all, I'm really surprised that nobody asked on the earnings call about this massive regulatory credit dump. I think this is like a record high for them, 890 million. If you strip that out and you strip out the restructuring charges as well, which were they were only 622 million. You get an even bigger miss of consensus EPS estimates. Now, this is despite the fact that energy maintained its high margins and did show like a huge upside in quarter-on-quarter sequential profits. But you can imagine if they didn't have energy to save the day, the numbers would have been even worse. And so the preferred measure I like to look at is the one that Zach Kirkhorn always used, which is automotive gross margins excluding regulatory credits and leases. And that, despite retail deliveries going up 12% quarter on quarter in Q2, that gross margin went down from 15.6% in Q1 down to 13.9%. It shows that the auto business is really suffering. And they mentioned on the call that it was due to the Cybertruck, and that's what I was guessing as well. A lot of people thought that the Foundation series being $20,000 more expensive than the normal prices would give it a boost into profitability. That obviously was disproven with these numbers. It's good to hear that they are seeing ex Cybertruck that the cost per unit are going down sequentially. That's what I was modeling in. But it's also the other thing that is very interesting just about these numbers, and this is how I do my earnings models, just average prices minus average costs. But average unit prices seem to have risen quarter on quarter, despite all the discounts that they were offering all over the world. So I think and this happened last quarter as well. So twice in a row, I've been surprised, and I'm just wondering if they're earning more money from other things like subscriptions, maybe.
Okay, thank you.
Yeah,
we're going to break it up a little bit. Yeah, I don't need to cover the entire call at once. Michael, Motorhead just took a shot at you, and he said a lot of people thought Cybertruck was going to add to margins, and Tesla singled it out as a bit of a drag. And he correctly pointed out, I've seen different estimates, by the way. Motorhead correctly pointed out that automotive gross margin, excluding credit sales and leasing, went down from 15.6% in Q1 to 13.9% in Q2. And also, Michael, the other thing I wanted to bring to your attention is energy gross margins were flat, 24.6 to 24.6. What do you make of that?
Yep. I was wrong on Cybertruck and on energy. And I'm quite disappointed on the financials for the quarter, frankly. The Cybertruck, I'm shocked actually, because they said not only is it not profitable this quarter, but it will be profitable at the end of the
Yeah,
year.
let me
Q4.
just point out real quick. So the Cybertruck, we covered it here that it was mathematically almost impossible for what you were expecting to be true. So I'm not surprised about that one, and it's normal. Okay. Also, that sentence about Cybertruck reaching profitability by end of year, they didn't specify contribution margin, gross margin, operating margin for that product line. I'm guessing that they mean gross margin. Okay. So not the contribution margin that Rivian talks about, but that's TBD. We don't know that yet. At a minimum, it tells me that the production ramp is going to be a bit slower than we expected going into the call, just slightly more. But the real story, in my opinion, like the real material new information that I got, at least, was energy gross margin flat quarter to quarter. You and I expected a significant increase on energy gross margin. We had people in here expect even more increase than you and I expected, but for it to be flat, that was really surprising to me. So I think that's what's being reflected in after hours market, the action. But later on in the quarter, they said something along like we'll continue the production ramp. So maybe the production ramp at Lathrop isn't as far along as the 9.4 gigawatt hour figure would have implied. Are you with me so far, or do you think something else happened here?
Yeah, I'm with you. I'm just curious about your math that you said that the Cybertruck being gross margin positive this quarter was impossible.
Well, it's just the volume is very low, so it doesn't yet cover it at that volume. It doesn't yet cover the fixed incremental fixed costs. Like, with any production line, you need at least 70-80% capacity for you to even start talking about profitability, and they're nowhere close to that. And hopefully by Q4 they'll get there. But
well, they got to profitability on.
So I would have said Q2. Maybe they broke, like towards the end, they broke even on the contribution margin. I was hoping maybe Q3 gross margin positive, but looks like it's going to be Q4 gross margin positive. So just one more quarter, right? It's still a very high in demand product. I mean, let's not make a mistake here. This product is going to change the roads.
Yaman, can I on that Cybertruck comment, one positive thing?
Sure.
The fact that they mentioned that they did they say that they're going to break even or be profitable by year end on Cybertruck?
Well, something about profitability, but they didn't specify what margin. Let me just pull that up real quick.
Okay.
Go ahead. In the meantime, Michael.
Well, no. What I was trying to say on that comment, the reason they can't make the car in volume right now is because they don't have enough 4680 in-house capacity. So the fact that they say that by year end we should be break even or positive, this points to Panasonic being on time with the ramp up of their 4680s in Japan. So it seems like there could be higher volumes and maybe because of that, the estimate that they're going to break even by year end because Panasonic's line is ramping up as expected on time.
Okay, the specific line from this earnings deck was Cybertruck production more than tripled sequentially and remains on track to achieve profitability by end of year. Michael.
Yeah, so Cybertruck probably contributed around $1 billion of revenue. And so at $1 billion of revenue mark, I think it should have been possible to get to gross margin positive. And they have done that before with Model S, X, 3, and Y in the
Michael, we talked about this. We talked about
before 70 or 80% capacity.
I don't know about that.
Okay, I'll do the research and we can circle back on it.
Okay, my good life.
I guess one of the tangents that I wanted to kind of talk about was I know Elon mentioned Waymo on the call, and Google also had their earnings tonight, and I think they announced that they're going to invest, what was it, $5 billion into Waymo over, I think, a multi-year kind of investment time frame. I guess this, I'm thinking about, obviously, Elon mentioning his view of the potential size of the opportunity being upwards of, $5 trillion. I guess why do you think Waymo isn't investing more to pursue that size of an opportunity with their own kind of car and service, whereas Tesla's obviously viewing it as the opportunity that justifies that valuation? Is it
Omar,
because of the Tesla fleet? That's my thoughts, but just curious what you guys think.
Omar.
I mean, Waymo needs a cash infusion to stay running because they're burning cash like crazy, far in excess of their revenue generation. So this $5 billion will likely keep them running for 1 to 2 years, depending on how fast they want to expand their service. So they're really kind of at the stage where they have a science project or a research project rather than a business. And pretty much nobody is actually making money from autonomous vehicles right now. So the next step for Waymo, the thing that I'd really like to see them achieve to say that they're closer to building a business is finding some way to actually generate positive cash flow and positive earnings. One way to do that could be licensing to other OEMs to integrate into their products, but because they require mapping, that's a little bit challenging to do. So we'll kind of have to see how they evolve, but for now, they're going to be dependent on external capital to continue running.
I guess why would the economics of Tesla's proposed robotaxi in the future scale so much better than Waymo doing it? Like, what is it
Yeah,
about Tesla that the economics are different? That
good question. So, with Waymo, they really started working on Waymo in 2009, about 3 years before the deep learning boom started with AlexNet. And the main innovation was mapping. It was when they started doing the Google Street View car. So what they do is they scan an entire area, they build a high density map with the LiDAR where they know every single thing that's going on in the city. They know exactly where the curb is, and they can scan with the LiDAR and localize themselves on that map with centimeter level accuracy. So they can know exactly on the road where they are, how many lanes there are, where the curbs are, everything they need to know. And then they, of course, have deep learning as well that they use in their systems. So it requires scanning an entire area, running and managing a fleet in that city. You have to have a car where you buy a car from a different manufacturer, then you take it to your facility, you start taking it apart, you start building your sensor suite. It ends up costing hundreds of thousands of dollars. And, for example, the Jaguar I-Pace vehicle that the Waymo was using is now being discontinued. So they're not even going to be able to use that vehicle anymore. Now they have to start preparing a new vehicle. The vehicle costs about 4 times as much as Tesla's vehicle. By contrast, Tesla's solution is designed to run on any vehicle that comes out of their factory. No other automaker is doing this, where any vehicle that comes out of their factory can run the software. And that should allow them to have a model where customer-owned cars can actually provide these services, and they don't have to build and maintain a massive fleet. They don't have to build and maintain a map of certain regions where they want to launch. And they can actually monetize it as an ADAS service, as a supervised service. And they generated billions of dollars selling it last year. So unlike Waymo that has a driverless car but no business, they've got a business but no driverless car yet. But when you really look at the software, it's trending pretty strongly in the right direction.
Thanks.
Okay, Aristotle.
Well, yes, thank you for having me on. I would just like to follow up on the last time I've been here, where I presented my short thesis, and I would basically like to make the case that it hinges on is that even if we leave complex technical discussions aside, my main point is that Tesla does not have the capital resources to fund its ambitious plans. Now, if you look at the balance sheet where you currently see about $30 billion, that might seem like a lot, but once you take into consideration the type of businesses that Tesla runs, many of which include a lot of off-balance sheet liabilities like insurance, and the working capital demands that automotive businesses require, the case that I'm trying to make is that Tesla just does not have enough capital to fund those ambitions. And I think that sooner rather than later, we are going to see a capital raise. Now, once we see a capital raise,
thank you.
Sure.
That's too much. We accept bears, but you still have to make some sense, you know.
I mean,
Tesla has more than $30 billion in cash on hand. Tesla is producing positive free cash flow. The regulatory credit sales, as much as Motorhead, this is them. They are part of the business. These regulatory credits are available to grab for all automakers, and the others are choosing not to produce EVs because they can't even come close to profitability. Therefore, they're going to be reliant on Tesla. Imagine that. A company whose competitors are reliant to it. Okay.
Yeah, man.
Tesla will generate billions and billions of dollars per year selling these regulatory credits to companies who just can't make it happen. Omar?
Yeah, I just think it's, funny. Waymo's raising 5 billion, Tesla has 30 billion. They're generating positive cash flow unlike Waymo, but somehow that's not enough. I don't think they're going to need to raise capital. And I think the regulatory credits issue was really the big black eye on this call. I think when the street looks at this and they look at, 800 million plus in regulatory credits, and you look at, what the net income was of the company, you go, wow, this is really a lot of regulatory credits compared to the amount of net income they have. And I mean, how long have we been following this stock where the bears are just pounding the table on this, going back as far as 2018? And when Tesla first became profitable, and they said, oh, well, it's only because of regulatory credits and 200 million, that's just going to go way down in the future. And it's just continued to rise. And I think the fact is, as much as bears want to argue that it's not real revenue and back it out, certainly it is more mercurial than just selling a vehicle. I think that regulatory credit revenue is actually going to continue to grow. And, there is, of course, like the Trump administration and all that could cause some volatility there. But generally, I think it's going to continue to grow. Automakers all around the world are actually pulling back from EVs. Their big ambitions of selling millions of EVs have failed. And generally, there may be a little bit of a step back here if there's a Trump administration or something. But generally, around the world, emission standards are only getting tougher. I think they're only going to continue to get tougher. And legacy automakers are now in a position where they don't have the installed capacity to actually make these EVs themselves. They're going to be dependent on companies like Tesla. So they've got a business model here where their primary competitors are paying them to disrupt them. It's a pretty great business.
Exactly. And we have a lot of other things to talk about. I don't want to get bogged down on these regulatory credit sales. We have quite a few things I want to get to. But Motherhead, just say a couple sentences on, and let's move on.
I'm just saying that the quality of earnings, Omar can sit there and, pontificate on, how the bears were doing this and that in 2018. We're past that now, okay? I'm just saying that the quality of earnings were much better in 2021 and especially in 2022 in the first half when they weren't relying on regulatory credits. And that's why the stock traded so high. Look at the stock now. It's like, it's getting dumped in the after hours.
Okay.
That's it.
Okay, thanks. Omar?
Yeah, I think generally what you see in this quarter, and everybody knew the auto business is challenged. Everybody knew about these subvented loan rates. It's been discussed on this space a lot. Nobody was expecting some, magical, huge quarter here. We've talked about the challenges with interest rates, with this sort of EV hangover, the slowdown in EV sales, after a period of pretty massive growth. But I see Tesla's really making a lot of investments here that are going to help them produce large amounts of cash flow in the future, especially as rates come down. They're talking about new models that they're gearing up to start production in the first half of 2025. That's obviously a headwind. Cybertruck is a headwind. It's the best-selling electric truck. They said it's going to take 12 to 18 months for it to be cash flow positive. No surprise there that it's going to take until the end of the year. They say they're on track with that. So they're losing money ramping up Cybertruck production and ramping up 4680 production along with it. But that investment will pay off in the future in a new cash cow vehicle, which is a hit. You look at, for example, $620 million in restructuring charges. That's a big black eye in the current quarter. But looking forward into the back half of the year, those are cost reductions that are going to hit the OPEX side and the COG side. And that's going to be positive. The 600 million in AI investment. Right now, it's just a bunch of money you're spending on GPUs. When you see what the software is doing as a result of this compute capacity that's being added, it's clear that it's going to pay for itself in terms of automotive sales, FSD subscriptions, and FSD purchases. So a lot of investments being made as we get into the end of this sort of unprecedented rate environment and the EV hangover. I think people will start to see that this business really is a cash cow, and it's a cash cow that has been in a bad environment. And right
Okay.
now, although they're in a bad environment, they've been making tons of investments into the future.
Okay. We have quite a few things we need to get to. While I have about Tesla and Tesla Scope, let's get an update on 12.5 rollout. I believe there is a second wave going around, right, about Tesla?
Yes, just during the earnings call, the second wave or the first wave, if you don't count the early access group, went out, and it's close to 1%, a little bit less than 1% of the entire Tesla fleet in the US and Canada. Although it only goes to Model Y hardware 4 cars, just as Elon indicated, that will be the main focus initially. But it's rolling out to everyone, not everyone, but the 1% or so outside the early access group. So that's good news, and we'll see how it goes. And I'm sure Tesla Scope can add on to this from his side.
Good. Tesla Scope. Thank you. About Tesla.
Thank you as well about Tesla. So it looks like obviously with the first wave, it went out to come the special groups, and Tesla has been very careful, especially with their latest updates, to make sure everything is as safe as smooth as possible. So with this new wave today that happened during the earnings call, it looks like Tesla has pretty much sent out this update to every single vehicle that was on 12.4.3, with the exception of some models. Now, the clarification I want to make about the Model Y comment that Elon made is he gave the impression that it's only compatible with the Model Y right now, whereas there are Model 3s, there are Model S's, and there are Model X's running 12.5 right now outside of employees that were included in that very first wave. So the update is compatible, and it's running smoothly, and it's running exactly the way it should. I think they just want to prioritize getting some initial testing in a one group where they can expect the same kind of parameters, collect as much data as possible with that initial expansion. And I think very quickly, even within hours, we'll see it expand to the remainder of vehicles that are still currently on 12.4.3. And then very shortly after, we'll start to see expand outward from there to other vehicles on 0.9. It's also worth noting that this is one of the most significant pushes that happened with the 2024.20.9 update, with getting as many vehicles as this close to a latest FSD update. We've typically seen the latest FSD updates being behind what mostly the current production builds are. So this is incredibly good news because now the majority of vehicles, at least those that aren't on the 0.26 update, which is a very small group, will all be compatible as long as they're in North America. So a lot of very, very encouraging news. And I think Elon and Tesla are watching very closely. I'm very, very, very well aware of their intended release during the earnings, just as a little extra little boost to everyone.
Great. Thank you very much for both. Omar, would you like to add anything to the 12.5 rollout? About Tesla said 1% of North America eligible fleet is getting it now. That's a pretty fast rollout.
I mean, I just really want this to roll out to everybody. I feel like a crazy person driving 12.5, and it's like an atomic bomb went off over the auto industry, but everybody's still kind of like, they're still all using 12.3. So all of the work the Tesla team has been doing, they're not really seeing it. Now we're getting into a place where it's hands-free. They mentioned in the release notes, hands-free with sunglasses is coming. Cybertruck support is coming. More natural lane changes. And it just works. It's not only intervention free for hours, but it's smooth, it's comfortable. Ashok had
Yeah.
a tweet today. He said, I like to bring a cup of coffee with me, and I see how long I can drive without spilling the cup of coffee. And this is the first version that was able to make it my 30-minute commute
Dude,
without any coffee spilled.
I saw that tweet, and in that moment, my mind just went to, okay, so he spilled his coffee every time before that?
I know. I was like imagining like his floor mats just like covered with coffee stains from like 4 years of FSD development before he finally got the thing to work.
I'm like, well, talk about testing. Hey, he also, Elon also talked a lot about the licensing. He got a couple of questions about it. They say we're talking to, I forget the exact wording, maybe someone can correct me, but they said we're talking to a couple of OEMs this time, not just one. And he got an analyst follow-up question, specifically about the things that we talk about in this space. I don't know if you caught that. The analyst asked, what is needed specifically for these automakers to license FSD? Do they have to have the same sensor suites? And Elon clarified there's no sensor suite, it's just cameras. And then he also says 7 cameras. I don't know if you caught that too. And then the analyst asked about electrical architecture. What do you think of Elon's answer? What do you make of the fact that Tesla got a couple of questions around this topic, licensing, FSD licensing?
Well, I mean, not really different than what they've said before. Now they mentioned there's multiple automakers. I don't know who they are. Doesn't mean that a deal's ever going to be met or reached. I think, look, if they can demonstrate that the software works really well, if they could demonstrate, for example, that the take rate is growing massively or that they've achieved driverless, then they'll have a line out the door for licensing. If you listen to their comments, they say, yeah, take rate's improving a little bit, but they didn't share any numbers. So it's not that great. And I think what they were saying and what I really believe is we really need to see 12.5. We really need to see the hands free before it is something that has a more material uptake. And I think if they're actually losing customers because of it, then they may consider licensing it from Tesla and begin that sort of years long process to actually do that. But right now, I mean, most Tesla customers aren't even aware of FSD, let alone other automakers really understanding its importance.
This is true. My good life.
So, full transparency, I've only ever ridden in a Tesla once in my life. I've never ridden full self-driving, so I definitely want to try it and experience it. Do they do test drives for full self-driving if you like go in and
Yes,
are interested?
absolutely. And
Yeah.
let me just kind of let everyone know we have quite a few people in the space right now. Tesla gives out test drives overnight. You can literally take a Tesla home, drive around 24 hours to your commute, daily commute, test around some superchargers, test FSD. All you got to do is just let them know you want to test FSD. Some cars may not have it, on these Tesla stores, but you can pick up any car, Model 3, Model Y, the new one, the old one, Model S, Model X, ask for FSD, go around for 24 hours, maybe even 48 hours, test it out for free. And it's great, okay? And I highly recommend people do that. Go ahead.
No, I mean, I'm certainly interested in test driving. I mean, in all honesty, I haven't really.
Well, do it then. What are you doing here? Go to Tesla.com, schedule a test drive.
Yeah, I think the thing is, like, I'd be interested in buying a Tesla, but I'm curious to see what these new vehicles are going to look like next year. So I know Elon mentioned not to talk about them on their earnings call because it definitely impacts their near-term sales. But
yeah, I think the next year Model Y is going to be something special. But if you want to get a taste of it, go test drive the new Model 3. It's going to have pretty much the same stuff.
So thinking about it from the standpoint of robo-taxi network, I mean, do you think someone buying a Tesla today, I mean, is it going to need hardware for to participate in the robo-taxi network? Or, like, I guess that's the concern for me is, like, selfishly, I'm more interested in it from the money-making aspect of it. Like, buying a Tesla today, would it be
Let me reword that question. So
Yeah.
Omar, Elon said that he got a couple of questions about the robotaxi network, and he said the entire fleet will wake up with a software update. And he said maybe some people won't want to participate, but he believes most will into the robotaxi network. What do you think about those comments?
I mean, the idea has always been that the cars could become robotaxis. But of course, there's a difference between them having that as their goal and actually executing that, right? There's significant execution risk. So it may or may not ever happen. I personally believe that it will happen. But yeah, the idea is you buy a car, you can run the FSD software on it, and it gets better and better until it's driverless. Personally, I think people focus a little too much on the driverless aspect of it. I think it's trending there fast. I don't think Elon's timeframes were unreasonable. I would say personally, 2026. Elon's always a little bit optimistic. I think it probably won't be as soon as he wants, but they really are making real progress. It's not just, him saying the same thing every year without making progress. So I think really what matters for the business in the near term is hands-free FSD is actually an essential product. For somebody who does a commute, this is something you want. Yes, when it's a robo-taxi, and if you could send it out driverlessly, that would be 10 times, 100 times more valuable than supervised FSD, sure. But it's gotten to the point where it's an essential ADAS product today, I feel like. And I think
Yeah.
this is going to start being important to their auto sales even before
Yeah.
autonomy.
That's what he said too. He said he believes FSD supervised will be material. Now, Tesla also made comments around Cybertruck profitability before I go to waiting for my Optera as well as trading Raven. So that implies what Tesla said on the earnings deck implies that Cybertruck is not profitable. And I'm here to tell you, Cybertruck's profitability is better than Tesla TSLA Live's profitability. Okay, Tesla Live's profitability is worse than Cybertruck and Rivian. If you want to change that, go to the tweet at the top of our screens, like and repost it so we can get Elon's attention to the problem. If X allows me to reduce my subscription price, we will go a long way towards making Tesla Live contribution margin profitable by the end of the year. So we're tracking Cybertruck. We're racing with Cybertruck profitability right now. Okay, waiting for me up there. Go ahead.
Yeah, on the call around the licensing, he mentioned that they probably wouldn't license to anybody until they had 1 million cars of production because it wouldn't be worth it for them to do that. And it just seems like that's going to be the hurdle for most of these OEMs is that they're not going to have 1 million cars of EVs for sale for another 5 years.
Okay, trading Raven.
Yeah, so I have a question. In the conference call, Elon mentioned that anybody who doesn't believe that Tesla will solve autonomy should sell Tesla stock. But I mean, uh, for public like investors to have believe in that they will solve it, they need some data, right? And not everybody has access to FSD or looking at videos doesn't help to understand what exactly the progress is at. So why are they hesitant of sharing some data around FSD progress? Thanks.
I think when they're ready, they will. They're not ready yet. Omar?
Yeah, I mean, data is kind of complicated. There's a lot of different ways you can slice it. So it's a lot more challenging than you think to just come up with some metric that's like a report card. You really have to do your own research. You have to try it yourself, maybe talk to other users to try and form a picture of what's going on. But I mean, I agree with him. If you don't believe that Tesla is going to solve autonomy, then good luck constructing a model that brings you anywhere close to the valuation they're trading at today. So if you don't believe they're going to solve autonomy, and there's always a risk that they might not, then you probably should sell the stock. If you believe they are, then it's probably still significantly undervalued. So, just from a theoretical standpoint, they've figured out a technique to do self-driving that works. And that technique is train a machine learning model on lots of hours of human driving, put it in the car, then the car can look at what's going on with cameras, and it can predict what the steering wheel and pedal output is needed to drive the car. And it can actually do this insanely well today. You can, check out my videos or go do a test drive or whatever. You can see that it actually does this very well. And when you look at all the GPUs they're adding, they're going to more than double their compute power again by the end of the year. They're going to train hardware for specific models, et cetera. They're adding more data. They're not anywhere close to what the capabilities I think are going to be. And you look at Waymo, they're running now millions of driverless rides a year. Millions. So autonomy, people have figured out how to do it. Self-driving solved. And the other day I tweeted out self-driving solved. And Paril Jain, one of the guys who worked on FSD 12 and actually left and is now starting a robot startup with the founder of Cruise, he commented, yeah, pretty much, the last piece is going to take a little bit of time, but it essentially works now. So you don't have to be a genius to look at this and say, this technique actually works. And everybody's sort of intuitions about this are backwards. People are saying, oh, I don't know if I would put my kid in something like that. Within 5 years, people are going to say, I don't know if I would put my kid in a manually driven car. Oh, her friend's dad is still driving manually? Yeah, I don't feel comfortable with that.
Luce.
Hello. So I wanted to say something that might be a little controversial, but I wanted to say that from a long investor perspective, the news are generally very good: battery, AI, and energy. So I'm very happy that the stock is tanking, so I can buy more. So it's very important.
Okay. I mean, when he was asked about IRA credits, I think Elon said negative short term, positive long term in terms of improving Tesla's competitive positioning. Right, Omar? Pretty much
Yeah.
exactly what we talked about here.
Right. Exactly.
Let's see, what else? Any other questions, comments about the earnings call? Please, if you have 12.5, please request to speak. Oh, let's talk about XAI. It looked like he opened the door for Tesla to make an investment into XAI. What did you think about those comments?
Well, it sounds like it's going to happen. They're going to put it up to a shareholder vote, and guess who's going to vote on it? those guys who came up at the annual meeting and said, "Oh, Elon, I love you. Can you let my toddler take a tour of the Gigafactory?" And they're all going to vote yes, and Tesla's going to take an equity stake in XAI. So, I mean, it is kind of interesting. You predicted that a conflict of interest question would come up around that, and it did. There
Dude,
probably are.
it was the first question,
Yeah,
like
right.
straight off the bat. But he was ready with the answer, and
Yeah.
importantly, he was ready with the answer. He gave a really good answer. Even the follow-up part of it was really, really good.
Yeah,
He
I'm not
said
really.
he said no matter what, those chips weren't coming to Tesla, so they were either going to XAI or going to next customer. I believe he said, right?
Yeah, I don't think that Tesla was harmed. I think that Tesla's only benefited from the relationship. I don't think Tesla should be training an LLM themselves. Of course, it is something that you want to be careful about managing, but having a joint equity stake or having Tesla take an equity stake in XAI can remove some of those sort of conflict of interest things as well.
Do you think it would be a acquisition, a majority stake, or a minority stake?
I would propose a 20% stake. I think having equity options for the technical team is a big motivator. So you want to give, equity incentive options to the team to motivate them. You want to have it as a separate company for that reason. Maybe be able to IPO or do something like that in the future. And they've also got investors who they took $6 billion from. So I think you want to keep them on the cap table. I would suggest Tesla maybe taking a 20% stake or something like that.
Yeah. He also said on the employees. So it's not just capital. It's not just GPUs, but also employees. He said, and you could feel the frustration in his voice. He's like, I tried to hire them for Tesla. They wouldn't come. They wanted to work on this. So that all makes sense. I thought the answer was perfect. My good life.
I guess as it relates to that, I know that he just recently, moved XAI and Tesla headquarters. I believe they're going to Austin, right? Or to Texas somewhere, maybe. I guess the thing that I was thinking about is, and he mentioned on today's call that eventually airplanes are going to be electric and boats are going to be electric. I guess I just foresee a future where it's going to be some sort of conglomerate between all of these companies where it's going to be like the next General Electric, where he's going to merge them all together. I mean, is there any obstacles, I guess, with SpaceX for that to be a possibility? Because if they're working on airplanes in the future, I can't imagine that some of the SpaceX engineers would be useful in that operation.
Omar?
Yeah, I mean, I'm not sure there'd be much of a benefit. All of these companies are at very different stages and profiles. XAI has no earnings, they have no meaningful revenue, they're investing tons of money. That wouldn't really fit into Tesla's balance sheet very well. It would probably swing the company into a loss if they were to fold those operations into Tesla entirely. SpaceX, I imagine, posts a loss many, if not every quarter. I think Starlink is probably helping a bit, but they're making massive investments into Starship and things like that. I could see, uh, being loss inducing items. So, generally conglomerates aren't really good. Small teams, small companies are more nimble. Maybe in the future, if the companies are all profitable or something, there might be an opportunity there, but it
I
doesn't
guess
really make sense within the next 5 years, I don't think.
so. I get what you mean about the small teams being useful, but I guess if we're talking about highly capital intensive projects in the future, where some are, longer term and some are shorter term, I mean, I think being able to almost like allocate capital like Warren Buffett between these companies would be more advantageous, as Elon obviously being a significant owner of all of them. That's kind of my thoughts, is would it be easier to build the future of what he's trying to build if, all of these
It would
companies
hurt
came
more than
together
it
or
would
something?
help right now, for sure. Maybe at some point in the future that changes, but I don't see that changing in the next few years. So I think they'll
Okay,
stay separate companies.
machine that magic.
I just hopped on, been out for the last 3 hours, but I did see
Why?
Tesla. I
Why?
have
Did
this.
you miss? Did you miss the earnings call?
I did.
Okay,
So I'll
then why don't you
review.
stay in listening mode and listen to the people who did actually pay attention, did their homework?
Well, I can say one thing, which is everyone's talking about, well, we can't add these other companies because they're not making revenue yet. And I would say, Tesla's currently valued based on a lot of future revenue as it is. So why not lop in X, AI, and SpaceX? I mean, it's all the same thing. Tesla's making 50 cents a quarter, $2, $2.20 a year, a PE ratio over 100. So just add them all in.
Hey, there was a 4680 comment machine. I thought you might have appreciated that. It said, in July, we entered validation of vehicle testing for our first prototype Cybertruck produced with an in-house dry cathode 4680 cells, a major cost reduction milestone once ramped. What do you make of that?
I saw that note, and it's a positive. Like, they're still working on DBE. They're making progress. It's much behind what we hoped, and even still, starting the trial test phase of initial production, we don't know how long it's going to take to ramp. But for them to state it, since they've been avoiding it for so long, I think is a positive.
Okay. What did you make of Tesla energy margin, gross margin staying flat at 24.6%?
Well, I mean, I was wrong, with my initial predictions, and then Michael corrected me, so we dropped it down. And that sounds like the cat maybe was right. The ASPs had dropped.
Cat expected
I don't know.
Cat expected a drop. We expected an increase, and I think we kind of split the difference there on Tesla Energy. But I think that's why the stock is down after hours. Are you changing your intrinsic value estimate for Tesla Energy after today's data?
No, not yet.
Okay. The other thing that Elon said was when Giga Shanghai ramps, which is supposed to be starting production in early 2025, when that ramps, double or maybe triple production capacity. What do you make of that?
Well, it's going to double. I think we know that. So him to say triple is just, probably exaggerating the truth a bit.
Or maybe triple from today's later levels. How about that?
Yeah, that's fine. Yeah, I mean, come on. There's nothing
You
new
don't
there.
think
Then
they
why does he
could
have to say it
triple?
that way?
I think they could triple. With Shanghai alone, they could probably triple.
From 40
Yeah.
to 120?
You don't think Shanghai could do 80 gigawatt hours with the battery supply chain they've got in China? I mean, come on, we're talking about a factory
Eventually,
in California here
when
compared to China. I
I'm
don't
not
know,
against it.
2026, 2027.
I'm just saying you got to take everything with a grain of salt and assume there's some bit of exaggeration in there, as there usually is.
Yeah. I mean, maybe double from 40, triple from today's levels, something along those lines. My good life.
I don't think Elon really touched on this. I know he was asked about a little bit about the election stuff, but I know Trump has, said that he'd slap import tariffs on China up to 100% on everything coming in from China. I guess, how would that impact Tesla if that were to be the case? If he were to put 100% tariffs on China, what would that mean to Tesla?
Well, Biden already put 100% tariffs on Chinese EV imports. So that's already the case today, I believe. Or I don't know if the tariffs have taken effect yet, but Biden has already proposed those tariffs.
I guess that's my question is, like, do they consider Chinese made Teslas to be Chinese to where they'd get tariffs put on them, or is it only Chinese?
Chinese-made Teslas are not sold in the United States. The United States is supplied from Fremont and Austin. Shanghai
Okay.
supplies the European and Asian markets.
Yeah. So my good life, we'll get a movie down. You come very sporadically, and just stay in listen mode for now. Machine, what do you think of several thousand Optimus by end of 2025 comments, and in 2026 ramping up production quite a bit?
I mean, I can't remember my predictions exactly when I said how many I thought they'd have next year. I thought I said something around thousands. I think everything's going in line with my expectation, and we see there's a claim that it's already doing something in the factory, and that everything's going to be focused on the factory at first. I think it's healthy. Projection. I don't have much to say. I don't know what else he said about it, but it's on path.
Omar, what do you think?
Yeah, I mean, it seems to be on track. He pushed back the timeline a little bit. He was saying it's going to be this year. Now he's saying it's going to be next year. So, nothing surprising there. Anything game changing is usually hard. If it was easy, someone's probably already done it because it was easy. So, I mean, this is an incredibly sort of challenging product, really talking about something that's like a human. They're asking you to build a human, right? So, this is even more difficult than FSD. I think they're making okay progress. I wouldn't really expect it to be something that we could buy until like 2027 at the earliest. So feels a little far out, but it is good that they're putting them in factories, learning, perfecting it, redesigning the hands, that type of stuff. So seems like good progress, but not really something that is going to be material in the next 4 quarters.
Machine.
The one thing that raised my eyebrow, which I would like to know, is now they're saying they're going to hope to start semi-production by the end of next year. Didn't he just say, or Lars say, less than a year ago, that they're going to be in volume production this year? That's like 2 years all of a sudden delay. Where does that come? Come on.
Yeah, well, we talked about this before many times. Every single time semi comes up, it's going to be competing for 4680 with other products. The semi truck needs a lot of batteries. So until 4680 ramps quite a bit, I mean, we're talking years out, I think. I wouldn't get too excited about semi. We have a couple of bears on the board. Let's get to what they have to say real quick. Magic, you owe me coffee.
I do. We'll settle this after. Really quickly, I want to just pose a question for the Bulls. How do you guys feel that over half the operating income comes from regulatory credits? I mean, I wouldn't be too happy about that. Yeah, let's just pose that.
Omar?
Well, I expect regulatory credit revenue to continue to grow over time. I would like to see, obviously, more of the earnings come from the core business rather than regulatory credits that can be more volatile, especially given the political situation here in the US. But I expect the core auto business to improve on its financials as you see this EV hangover pass, you see rates come down as FSD improves, and as Tesla brings out some of these new models.
Okay, so that's Q1 and Q2 EPS are down.
Hold on one sec. Let's go to Machine about that too. Machine?
Listen, I mean, I agree with the fact that you can't just totally discount regulatory credits because they've been around for many, many years for Tesla. They're not necessarily going away. However, at the same time, people are saying, "Oh, this earnings was low this quarter because the one-time hit from laying off all the people and Forex was down, and if we took those out, our earnings would be up 50% higher." And then they say that without mentioning that regulatory credits were probably $400 million higher than normal. So I think if you take all those combined, maybe earnings would be a little bit higher than they were, but not too much. So I think it all kind of balances out in the end, mostly.
Okay, Magic, next question.
Yeah, I think the next question that we're looking at is so there was some other debt. So I guess everybody here, all the bulls were saying that the balance sheet is great. They have a lot of cash. Why are they taking on more debt? That other debt, about $2.5 billion of other debt.
Yeah, it's non-recourse vehicle energy financing. With leasing rates staying so low, I'm guessing it's mostly energy financing type of stuff. We'll get more data on that in the 10Q probably.
Yeah, I mean, obviously they added to their debt cash position in the quarter. People often conflate some of the vehicle financing and energy financing associated debt with them actually, requiring the debt to fund their operations.
Okay, any other questions, Magic?
Yeah, I guess I'll pass it off to Grant for right now.
Grant?
Yeah, I feel like the results are kind of just what I have expected over the course of the last 12 plus months, which is to say declining gross margins on the auto business. I mean, they're producing less. They can't sell them at a healthy profit. They're obviously benefiting from these government programs. I think in the event that they get taken away, it's potentially a pretty dire situation for the business because the market clearing price is just not providing a ton of margin. I guess I would ask the question, when do you guys think gross margins will actually bottom for this business? I know Gary Black has been saying they will for like a year and a half or something.
Which business? Auto?
The auto business.
Machine?
I'm sorry, I missed the question. Is this the bottom for gross margins, auto gross margins?
Yeah.
I think they're still going to go down. I mean, your mom was right that it hurts me to say that the used car prices are continuing down again, and that's just going to put pressure on Tesla list prices. And they masked it with instead of ASP drops by the interest rate financing, and people thought for some reason that magically meant it was the bottom, but it's not. And I don't know, the data is kind of undeniable at this point. It's going to keep going down.
Yeah, let me add a bit of color to that. So Tesla patrons get Tesla weekly updates on Saturdays or Sundays. Part of it is tracking used Tesla prices as well as FSD resale values. Used car prices are declining. This is due to seasonality, two, high interest rates. Both of those are probably going to be true for the rest of the year. So the auto business will be pressured for the rest of the year, most likely. But other automakers are starting to feel the pressure now too. So it's not just Tesla. Other automakers are also starting to feel the pressure. We're seeing some cracks in a car dealership guy tweet a couple of things about Stellantis, for example. They're also starting to feel the pressure. So it's an industry-wide issue that's probably going to continue for the rest of the year. Now, for Tesla, there is a company-specific factor as well, and that is, what Elon talked about, kind of, under his breath a little bit. With the new vehicles coming up, you don't want to Osborne your current production, but the Tesla community is very aware of these rumors. So the new Model Y or other vehicles that Tesla will produce early next year is going to pressure Tesla's current automotive business this year. So that should work itself out throughout next year. Grant?
Yeah, not trying to be negative here, but in my mind, it was a pretty abysmal call across the board. I mean, what is the spin zone saying here? Omar, what are your top 3 positive takeaways?
Well, I agree with you. It wasn't really a great call performance, but I think it's a great business. They rolled out FSD 12.5. They are talking about the dry cathode, which is huge. The cathode is really the major part of the cell cost. They're on track for new vehicle models to be produced in the beginning of 2025. I mean, that kind of surprised me. I know they've said it before, but it's kind of hard to believe given that they usually unveil vehicles so far out in advance. So I think we might be seeing some of those in October. Um, and, generally, I think people are just really liking the products. It's easy to kind of look at this environment and where, you have a glut of auto supply and especially a glut of EVs on the market. You have high rates, you have numerous headwinds in China, and say, oh, EVs are over, Tesla's not going to be able to make money. I don't think this situation is necessarily a permanent situation. They are, when you look forward, I think getting past most of this now. And I would expect that probably this quarter they're going to beat year over year. I think that's going to be a pretty easy beat given the comp in the year ago quarter. I think they've got a good shot at beating in Q4. Margins might not bottom, until the end of this year or until we start to see rates coming down. But they're investing a ton in the business that I think is going to pay off. The restructuring charges we saw in this quarter, that's going to improve profitability in the back half of the year. Investments that they're making into AI infrastructure, all of this is going to translate into more vehicle sales as they get FSD supervised launched in all of their major markets.
Grant.
Yeah, all fair. If input costs hadn't declined so precipitously, would they have any gross margin? Like, I haven't done the work to assess exactly how much the battery accounts for inside their cost structure, but obviously lithium has just plummeted over the last 12 months. Does anyone have an answer to that question? Like, it to me feels like if they hadn't seen that kind of nice monopoly card of a cost curve inside of that input, they could be losing money on every card that they sell right now.
Omar? Well, they're the only ones making money selling EVs in the world. So, you can say, oh my God, their earnings are so terrible, too much of it's regulatory credits. At least they've got earnings, right? That's a little bit of a better situation compared to their peers. So I think there's a lot of things that they don't necessarily need to be doing. They don't necessarily need to be investing in building their own battery cells or ramping Cybertruck or just building up training compute forever or building Dojo. If you really just wanted to kind of look at the core business itself without some of these headwinds, I think it would look much stronger. But they're investing in the future because they think that they're going to get a decent payback. So we're in a tough environment for EVs. That's universal. It's not just a Tesla specific problem, not just related to their Osborning of the next products that are coming next year, but it's really an industry specific problem. And despite some really strong headwinds that have decapitated some of their peers, they're continuing to be profitable and continuing to invest in everything they need to invest in. It's not a great quarter. It's not a quarter to write home about, but they're still making money. They're still making the investments they need. I think this business has a lot of growth ahead of it in terms of its earnings generation potential.
Cool. Does anyone have an answer to the question I asked, though? Maybe Brad, like, do you have a sense of how much the battery accounts for and the level of cost benefit they've seen from the decline in the cost of the inputs? That was the question.
Well, what do you? I mean, I sort of don't understand your question about the batteries, though.
If lithium, like, if the cost of inputs hadn't declined as much as they have, would these cars be selling at a profit, or would they be at a negative gross margin today?
Well, so the cost of lithium in Tesla's battery packs has gone from like a high in 2022 of about 5,200. This is just the cost of lithium per Model Y battery pack was about 5,000. Yeah, about $5,200. That's gone down. If you use the spot price today, it's gone down to 941. Just the cost of lithium. Then there's nickel prices and stuff like that. But the point is that Tesla should be. I mean, this is the biggest fear as a Tesla bear who's short the stock is that these record low, not record low, but I would say like multi-year low prices of the lithium have come down so much, and we have yet to really see it trickle into Tesla's earnings.
Well,
Yeah, I
in
mean,
my mind,
it's
that's like a benefit, right? Like, I mean, that's the question I'm asking is think how bad it might be if that was still at $5,000, right? Like you would see the gross margins effectively eviscerated.
oh yeah, but the thing is that the way these car makers, especially Tesla, run these raw material programs is they lock into long-term contracts. First of all, Panasonic, Cattle, and BYD have their own long-term contracts, and then Tesla sort of goes, goes in there and helps, and goes to the miners and has various contracts with them. And it's a black box. You don't know exactly how they're doing it, and it's on a formula as well. They'll agree to a certain price based on the spot price at the time of the contract, and then they'll adjust it based on the change in prices. So I'm sure that the cost of lithium for the battery pack cost in total has come down for Tesla since the peak of the lithium price in 2022. But I think it's not as low as what the spot price shows.
Bears have taken over the space. What is going on here? This is bear to bear talk. Bears asking questions. Bears are answering questions. We have 3 bears on the board, 4 if you count machine.
Well,
and we have Omar and Alex.
Numbers.
We have Omar and Alex as bulls. Alex is in the talking. Omar is fighting 4 bears right now. Machine, go ahead.
Well, do you see what happens when you let the 2 bears talk to each other? It just devolves into a separate world. They're isolated. They don't understand reality. I'm pretty sure Motorhead just insinuated that a battery pack that costs $100 per kilowatt hour, so a Model Y pack is going to cost, say, $7,000 to $8,000. That $5,000 of that is lithium. Something's wrong there.
It used to be. If you use the spot price the lithium price reached an all-time high, I think, in Q4 2022. If you use that spot price at that time, one Model Y, the battery, the lithium component of the battery pack alone was $5,200. And if you use the spot price now, it's dropped down to $941 just for the lithium.
Well, it's kind of a silly question that Grant's asking. It's like asking, and of course, they don't just buy lithium on the spot market. They write long-term contracts for lithium. But it's like saying, hey, if CPUs weren't getting faster any year, would Apple even be selling any computers? Well, maybe not, but we live in a world with Moore's law. The processors are getting faster every year. Now just go chart out battery prices, dollar per kilowatt hour at the pack level or the cell level for the past 20 years. They've been consistently falling. The only exception being the pandemic, where there was a global supply chain shit show combined with an EV bubble. So what happened is everyone got way too excited about EVs as Tesla became profitable. Everyone said, oh, we're going to make all these EVs, and they had battery factories constructed, and lithium prices shot up as demand just went through the roof. And these automakers said, oh, we're going to make 1 million EVs. And of course, people, partly speculation, partly people trying to secure supply. You saw a lot of these commodities, not just lithium, but nickel, cobalt, pretty much everything shoot up. And you really saw an anomaly there with battery cost rising. But I think it's pretty safe to assume that the long-term trend of battery cost declines is going to continue. And that is going to continue to benefit Tesla's COGS.
I think that they reserved well ahead of the huge spike in 2022, which allowed them to ride out that inflationary phase for raw materials quite well. But it remains to be seen whether they can go lower than the pre-spike in 2022, where it was much lower.
Okay, lithium prices are actually continuing to decline. Let's go to Jiva. Jiva, go ahead.
Hey, sorry, but having a bit of cold. So one of the things that Elon said is, if you don't trust Tesla and autonomy, don't invest in Tesla. And he did. I think I heard him saying that we are going to request for regulatory approvals by the end of this year, if I'm correct. I'm just curious, Omar, since you have the newest version, has anyone compared when Waymo went for regulatory approvals? What was the miles per intervention and where we are at, and is that even feasible by the end of the year?
So I think what he said is that they're going to try and get FSD supervised approved in Europe and China before the end of the year. A lot of people think there's some regulatory authority where you go and you say, "Oh, regulators, we've created a robotaxi." And they go, "Ah, thank you. We will put it to the test. And if it passes all our tests, then we'll let it on the road." There's no such regulator, okay? There's NHTSA, there's the states, the state DMVs. Regulation right now is just mostly handled through the state. So if you want to get a driverless car on the road, you just go to the state DMV and you get a permit. And they say, "Okay, is this thing going to be crash?" And you say, "No, we don't think it's going to crash." And, they have some conversations. And if there are issues, then they revoke your permit. So that's kind of how the regulatory process works. But on the call, he was really just talking about the unsupervised system, right? You have to walk before you crawl. So this is going to happen one step at a time. Don't expect it to happen overnight. Don't expect it to even happen, when Elon hopes it's going to happen. It's going to take time. And so the first step is, can we just launch FSD supervised in China and Europe? And if we can do that and we can start getting a lot of zero intervention drives, just like we're seeing here in the US, then we're on track to eventually launch FSD unsupervised too.
Thank you. And thank you, Jiva, for the question. EV1.
Yeah, this is back to regulatory credits. I've been in the stock 10 years. If someone told me that 10 years from now, they're going to get 890 million in regulatory credits in one quarter, I would have laughed at them. So the question is, can someone explain to me how they're going to go away and when are we backing them out?
Omar? Sorry, Machine.
Well, to be clear, and I hope people understand, I give context to my statements. I didn't say to back them out all the way. I said you have to look at the quarter to quarter variability. And this quarter was 800 million. And if you look at the previous quarters of the last few years, the average is about 400 million. So my point simply is, if you're going to talk about taking out the reduction from the workforce cost and forex cost as saying the earnings should be higher, you need to also adjust down for the higher than normal regulatory credits, not wipe them out altogether.
Yeah, that wasn't really aimed at you, but we tend to just back them out immediately. Gross margins, X credit. They're not going anywhere. Why are we backing them out? They lowered the prices on their models. Legacy Auto tried to throw their hat in the ring. They can't hack it. So we still have these credits. So when will they go away?
They're actually going to increase. Everyone's been treating them like they're going to go away for years, but now we're seeing record levels. And the reason we're seeing record levels is because the other automakers are losing so much money making EVs, which they need to do to comply with the emission standards, that they're saying, "Hey, this is actually losing us so much money that it would make sense to just cut production of the EVs and buy more credits. That would actually be better for our bottom line." And so that's what they're doing.
Okay, we have quite a few hands. Let's go through this real quick. Let's go to Machine, then Magic, then Motorhead, Grant, and then Steven.
Just in context overall of credits and valuation, sure, we take them out when we talk about gross margin, but no one's taking them out when they evaluate how much money Tesla makes. And I know people want to say I'm bearish, but I really think just looking at a company that has
No, I don't think that's true. First of all, you're making blanket statements like no one is taking them out. Have you met every single analyst that analyzes Tesla in the world? No, obviously not. And there's actually an argument that I can make that you should take them out, right? Like, for example, if Trump comes, like, I'm not saying it's going to be the case, but one can reasonably make the following argument. If Trump comes, gets rid of these emission standards, those credits could go away or dramatically reduce. There is a possibility of that. So as a buy-side analyst, you should probably do a scenario analysis here. Machine?
Well, I didn't say whether you should or shouldn't. My point is that they're not right now being taken out. The company's operating at a 100 P ratio.
I gave you a chance to correct your misstatement, and you fumbled it.
Forward
so let's go to
P
Magic.
ratio.
Magic.
Hey, yeah. So for the regulatory credits, I just want to point out that it was extremely convenient that it doubled quarter over quarter, conveniently with the month that they had restructuring. So just kind of not a red flag from an accounting standpoint. Just ignore that. But yeah, I mean, it's low quality of earnings. That's really what we're saying, is that this is government welfare. This is corporate welfare. I mean, this is like counting someone's food stamps as their monthly income. I mean, it's good. It's okay. I guess you can consider it, monthly income, but it's government handout. So, I mean, it can be taken away at any point. I mean, we don't know when, but it's possible.
Omar? Yeah, it's, not quite like a food stamp. Obviously, there is a public interest in there being clean air, right? The public likes clean air. We want our cars to pollute less, right? There have been a number of health issues that have been documented as a result of air pollution, coming from vehicles. And there is also, of course, people saying, hey, okay, if we keep putting exhaust into the atmosphere for hundreds of years, is that actually going to impact the earth negatively? So these sort of concerns are not really going to go away. And as technology allows, regulatory standards for emissions will get stricter. In the future, I think it'll be much more difficult to sell a gas car if there's alternatives available that don't pollute like EVs. So, you may have a situation like, for example, let's say Trump gets elected, which isn't a sure thing. Let's say Trump gets elected and he relaxes the EPA restrictions. Well, first off, I think it's important to note the EPA restrictions that are in contest, the so-called EV mandate, which isn't really a mandate. I believe it's for the 2032 to 2037 time period, right? So we're really talking about future CAF standards that haven't been put into effect yet. I haven't heard any talk about lowering the existing CAF standards, which aren't as strict as what's being proposed. So maybe they don't get raised as much, but they're probably still going to continue to get up over time. And, let's say Trump even cut the, CAF standards. Let's say he went against California. Let's say he did everything he could to weaken emission standards, which he did in his last term. He removed California's waiver, for example. Well, guess what? In 4 years, there's going to be another election. And the next president may do the complete opposite. As a matter of fact, if Trump makes a big show out of cutting them, that may make it even more of a reason for the next candidate to put it in stronger. So there's some volatility in these things with politics. Things can come and go in different markets. Things can change in different markets around the world. But just chart out the trend over the last 10 years, and it'll become clear what direction this is going.
Motherhead. 20-minute warning. 20-minute warning.
Okay, very quickly. In Japan, I covered Suzuki and Daihatsu. They make K cars, these mini cars that run on engines of around 660 cc's. But they received a huge tax break from the Japanese government because they had better mileage than the regular size cars. Those stocks traded on discounts. I mean, Daihatsu has been acquired by Toyota since then. Suzuki has gone on to be the largest player in the Indian market, so it has a valuation premium now. But back when they were only mainly selling in Japan, they had a discount to all the other car makers because they received favorable tax treatment. Germany just saw their subsidies disappear. China could do the same thing. They have a program that's on a time span. So when those ZEV credits get taken away, Tesla's earnings will go down. So that's why you have to strip that out and take a look at it.
Grant.
Yeah, two quick comments. First, Tesla is functionally an acquisition vehicle for government handouts. It's practically designed to do it, and I think it's worth considering what happens to the business when they actually do go away. And then the second is, from a regulatory perspective, Elon's answers on those questions that he's beginning to consistently get, which, you know, is obvious that he'll be asked those questions. It's very relevant to the rollout of robotaxis. It just points to the fact that he has no idea. He's just saying like, oh, well, you know, once it's so good that people can't deny it, they'll obviously allow it. I'm shocked that he hasn't invested like 5 minutes in a better answer for that, because to me, it indicates he has no idea when, how, if any of this will ever be commercialized as a robotaxi.
Well, I mean, it is true. What he's saying is true, though. And it's in line with what we discussed here for years.
I disagree.
I don't think any regulator or lawmaker is going to stand in the way of saving human lives. That would be political suicide, I think.
No regulator has ever stood in the way of advancing autonomy. Nobody's ever stopped driverless cars. They've only continued to expand through all of history. Of course, there's examples like Cruise, where they
And
do something wrong and get their permit pulled.
I'm so happy that Elon called them out. That the reason why they can't do it because they couldn't figure it out, not because of a regulator. And it's so true.
Yeah, I mean, the regulatory problem is that they got their permit pulled.
Yeah.
I thought no one ever stood in the. I mean, guys, just be honest for a second. No one really knows.
Go ahead.
I just want to say, Elon saying again that they're going to instantly have this fleet to turn on is just reckless assumptions about the infrastructure needed.
Lars kind of stepped in. Did you see that?
No, I didn't.
Was it
That's
Lars?
good.
Yeah, he was very political about his answer too. It's like didn't contradict Elon directly, but he said something like, I think he pointed to NHTSA regulating in every 50 state, and road rules are the same, but some states, and there's on top of that, there's some states and even municipalities, he said, may have some regulations. So he kind of implied that they may not be able to do it nationwide, but I would say, like, even if it doesn't happen nationwide and it's a state by state, I think it's going to be a rapid progress across states. So, Machine?
You don't even have the charging infrastructure to handle this right now. So, no, you're not going to be able to turn on all the cars in California and just have them be robotaxis in one day.
Yeah,
or
they're going to
a
need
year.
to build some type of fast charging network, some kind of network that has super fast charging.
Oh my
speeds.
God, yeah.
Maybe they could call it the supercharger network.
I mean, they have the network, but are you just gonna? I guess you could just hire people. You can get the immigrants that are climbing over the wall, and bring them to just plug it in. I guess it doesn't cost that much.
All right. We have James Cat in the audience. If he wants to come up, we can talk about it a little bit. Grant?
Was just going to double down on the idea that no one really knows what it's going to take to get Tesla robotaxis out on the road with approval from regulators. I think a lot of the analyst questions on the call around whether or not a vehicle without a wheel will ever be approved by regulators were good ones. And I think the arrogance of a lot of people that, oh, well, obviously it'll just be straightforward and how could they possibly say no, is something that will be looked back on with, regrets.
Yeah, honestly, what you just said at the end did kind of cross my mind a little bit. And while he was talking, because like I have agreed with him on previous statements. Like, for example, I even actually like tweeted about these things before he even says them sometimes. Like, for example, Teslas are appreciating assets back in 2019. I thought that FSD would be done by now. And because of that, the Model 3, $35,000 Model 3 wouldn't be selling for less than $35,000 with FSD fully developed. But obviously that was very wrong. Today you can get a Model 3 on the used market for even less than $20,000. Had FSD been completed in 2020, as was the original plan, then I don't think that would be the case. So the mistake was being too optimistic by several years on the FSD front. So now I think that we should be critical and maybe try to even play devil's advocate at times to these statements. And I think that so as like literally this was going through my mind when he was saying that. I was like, oh wait, that's exactly what I say, but that's not like when we agree on things, that's not sometimes good. So okay, so let's like what could happen, machine, that leads to a nationwide rollout taking longer than we think? Like make an argument that a lawmaker would indeed argue against FSD and robotaxis, even if billions of miles of data is put in front of them, proving that they're safer than humans.
So you're asking what would make regulators prevent it from happening? Specifically, regulators stopping it?
Yeah.
I'm not up to date on their requirements for what's needed, to be honest. So I don't know if I could say what excuses regulators are going to have in terms of saying, oh, you need to have this sort of supervision, you need to report these stats. I'm not sure. I have other reasons that aren't about regulators, but maybe someone else can suggest.
Well, I can provide one example. I don't think this can be like a widespread thing, but one state, for example, Michigan, or one country, Germany, if they're concerned about local workforce working at legacy automakers and they come to believe that FSD is going to lead them to get laid off and lose votes, etc., they can contort any sort of reason, even if maybe like you need this specific sensor for us to approve it, kind of thing, and maybe stop it or at least slow it down by a few years, right? So maybe if you zoom out in the grand scheme of things, one could say even if one state follows another state by 2 or 3 years, in the grand scheme of things, it's not that big of a deal. It is kind of instantaneous in the arc of long arc of time, but for investors, it might make a bit of a difference, right? Is that fair to say, Machine?
Yep.
Okay, James Katz.
Yeah, hi guys. I mean, you guys, people that know my opinion on FSD know that I've always been sort of on the conservative side, right? And but this is one area where I'm not like if I want to play devil's advocate as a bull for FSD, this is one area where I'm really not overly concerned with regulators. I feel like if they can show that they have the data and then the data is sufficient and it's proven to be safer than human driving, I really don't think regulators will be a big obstacle. And from an investment perspective, I really don't think the market will necessarily wait for regulators to make up their minds one way or the other. Like if they figure out the technology and if it's effective enough for it to be safer than human driving, it'll be priced in before regulators make any decisions, and it's just a matter of time, because then it's going to become a political thing where potentially there will be lives at stake, and I think it's going to be a very easy argument for Tesla to sort of win, right? So this is one, like I said, I'm conservative on FSD overall, like for them to get to this point. But I think if they get to that point, I'm not concerned at all about the regulation aspect of it.
Okay, let's take what Grant has to say, and then I want to get to James for his kind of views on the earnings. Grant?
Yeah, I'm just of a very different opinion when it comes to regulators. Regulators are humans. Their constituents are humans. As much as you would like to think that everyone has an engineer's mentality and is driven by data, the reality is that even if a robotaxi in the city of Tucson, Arizona, or wherever has gone 1,000,000 miles without any issue, if it mows down a 9-year-old child and people in the community are upset, it's not unreasonable to think that a regulator might say, you know what, this is illegal now. The simple fact is that is actually like very much how regulators can work. I think that there's a long list of laws in this country that may defy logic or data. That's just how the system works. And I think that people are much too optimistic on the idea that people are going to immediately pivot to robotaxis as soon as an ounce of data supports it. The only other thing I'll say is that with people being human, I think it's also worth considering the fact that if they just don't like Elon, they might be reticent to give him a massive, windfall in the form of exclusive access to a particular locality for autonomy. Final thought. If I was Waymo and I was competing for this very valuable end market, I would lobby regulators with the idea that having LiDAR is safer than having vision only, because it provides a fail-safe and it provides a second set of, checks on the data that the system's taking in. I'm not saying that's true or not. I'm just saying that if you're playing to win in this competitive market, you're going to roll out whatever rationale you can to secure rights to it and, denigrate your opponents however you might.
Okay, Omar, just final thoughts on the topic.
Yeah, I'll be quick. So we're now having millions of driverless rides a year. There are hundreds of thousands of people using FSD. No examples of 9-year-old children being mowed down. Actually, 9-year-old children are being mowed down by human drivers. So to say, they're just going to adopt a completely illogical law, I don't really see it. On a second point, bears often bring this up. Oh, regulators are going to require LiDAR. I mean, if they require LiDAR, you put LiDAR in the car, but regulators have consistently said, we're not engineers. We're not going to legislate technology solutions. We're going to set performance standards and leave it up to you to figure out the best way to do that. If you have a much lower cost solution that can achieve the same performance, we're not going to add extra cost and stop it from rolling out across the market.
Yeah,
Thank you.
just to back up what Omar just said, I agree with you, Omar. And if you look at Waymo's data, like what they publish crash data. They titrate based on the severity of the crash, or the serious crash and like minor collision. And I think that's the real, and they compare that to average human driving. So that's the real data that people are going to be looking at. Regulators probably are going to be looking at to make decisions about whether or not to approve FSD. So again, like, to play devil's advocate here, I really think that if the data is favorable, it may not be all jurisdictions that approve it right away, but there may just be like a couple, and then it'll be like a trickle-on effect. People will start to expect that the product will be approved in their region because it ultimately will be safer than human driving.
Hi, thank you. Let's zoom out. James Cat, what do you think of the earnings release, the earnings deck, and earnings call? Anything stick out to you?
Yeah, so I want to listen to the call again to see if I missed anything, and I want to go through the deck in more detail. High level, I could just speak to like high level. The good thing is, like, the bullish take on the earnings is that they were able to reduce their costs quarter over quarter, despite production falling, despite there were changes in the production mix this quarter. I was expecting cost to increase. Cybertruck production was up, so I thought maybe that would have an impact. China production was down, and they still managed to drop costs quarter over quarter. So maybe I underestimated the impact of, I don't know, raw material costs falling or something. So I think that's a very good thing, and that'll probably be favorable moving forward in Q3 and Q4. On the flip side, the impact on ASP from the financing rate was much more much more impactful than I was forecasting. And if you look at my numbers, like, line by line, where my biggest miss was on revenue, like in terms of dollars, it was up there. It was on the automotive sales, and this is a problem because going into Q3, like, they started this financing rate to start the quarter in China. Last quarter, I don't remember when they started, but it was in the beginning of the quarter. And they started in the US, now it was only 0.99%, but they started like I think midway through the second month, whereas they're starting this month in Q3. So there's going to be more cars that are going to be affected by the financing accounting in Q3 relative to Q2, despite the fact that it's a higher interest rate, so there's less of an impact on the dollar side, but it'll affect more vehicles. So I'm not sure how that's going to play out, but that's a risk. And many other countries are eligible for financing this quarter, like the UK, like Germany. Germany was also part of it last quarter, but there's some other countries. I don't have the list in front of me, but it's going to probably impact their ASPs negatively again in Q3. So auto margins probably going to continue to trend down. I think that's probably the biggest risk from a financial perspective. To be seen if energy can sort of compensate. We saw a big jump in energy revenue and with flat gross margin, which is pretty impressive this quarter. I'm expecting the gross margin to sort of trickle down or at least stay flat next quarter. I don't expect it to increase. because Tesla started taking price cuts on Megapack pretty consistently throughout 2020, 2023. And I think, the backlog at the time was sort of, we were kind of in the neighborhood now. So ASP for installed energy is probably going to decline as costs decline. And I'm expecting the margin won't necessarily increase all that much. So I don't know if that's going to offset enough to offset the impact on the falling auto margin. So that's my biggest concern on the sort of Q3, Q4 margin side. Putting aside potentially any sort of white, I don't know what the term is, like upside surprises from FSD, potential penetration, or FSD pricing going up, or something happening on FSD that would change sort of the situation on auto.
Okay. Magic, do you agree with the comments around financing?
Yeah, and that's kind of what I was going to allude to, is that's having an outsized impact on margins, and I expect that to continue as more financing deals are there. So I estimated it based approximately, $5,000 on $40,000 finance. So
Okay. James Cat, so the Fed is set to cut rates in September. I believe the markets are pricing that in pretty much 100% now. How many cuts do you think we need to see before we start kind of this ASP margin pressure on automotive easing a little bit?
Yeah, that's a loaded question. Financing rates are just one part of the story, right? It's a whole bunch of factors that are sort of driving this. There's excess supply. There's the rates, of course. There's issues with demand. There's changes potentially with EV penetration that are. It's a number of different. I can't really give you a straight answer. It's kind of a loaded question.
Yeah.
Yeah.
Okay, I have 13.9% for gross margin regulatory excluding regulatory credits. Is that what you have to? I think I saw a different figure from you.
For Q2, it was 14.6.
Yeah, how did you calculate that? I have 13.9, and I think somebody else mentioned 30. I think Brad mentioned 13.9.
If you take the automotive sales on the income statement, let me just pull up their statement right now. So the 19.878, and you back out the regulatory credits, and you use that as your revenue.
Oh, okay. So
you get
you're
14.6.
including leasing
Yes.
revenue as well. So I
Yeah.
actually go all the way down to statement of operations. The 29th page, 23rd page out of 29, and I use the 18,530. So excluding leasing and excluding regulatory credits, and I did the same on the COG side as well, and that's
Yeah,
how I got to 13.9. Because the leasing margin is very different. It's like 45%.
Yeah, I typically, when I analyze, maybe I'm doing it wrong, but I always usually just blend everything.
I got you. Okay. Well, I'm
Yeah.
glad that we just understand the difference. On energy, how confident are you that I'm willing to bet you coffee bet. Let's do our first coffee bet that I think energy margin will increase in Q3.
I don't think it's going to increase because look, we saw like the huge jump in deployment this quarter, right, over last quarter, and margin was relatively flat. And I think what Tesla did over when they were taking those price cuts, and I have to go back. I have a post where I actually go through all the different price cuts, but there was about 4 of them, starting I believe in April 2023, maybe even earlier than that. I'd have to check. But what I think Tesla was doing there was cutting along with obviously the costs of the lithium and everything else that went into the battery were declining. The raw material costs were declining, right, over 2023. I think what they did was they cut price to try and drive as much market share as they could, keeping margins stable. And the first sort of chance that we had to test that hypothesis was the data that we saw in Q2, and it turned out to be true. So I could be wrong, but my baseline assumption is that ASP will decline, so will cost. Margin will stay relatively flat, even if we see deployments continuing to sort of trickle up. I could be wrong, but I don't think it'll be wrong by much. If I'm wrong, like I'm not expecting margins to go from 26 to like 35. Maybe it'll be a percentage up or down, but I don't see more than that.
Yeah. Okay. Are you comfortable sharing how you're positioned in the company? Are you long? Are you adding shares? Would you buy the dip tomorrow?
Sure. So I'm not long or short. I'm neutral. I've been sort of neutral on Tesla. I've been trading for fun in and out for the past, I don't know, since basically Q4 2022. which was when I started seeing cracks on the fundamental business from an auto perspective. And that's when I really lost my sort of like before, like I was all in investor from 2019 to that date, basically. And at the time, I was perfectly comfortable watching my portfolio increase and decrease by, you know, 30, 45, $50,000 every day. Like the swings were not a bother to me because I was very, very convinced in the long-term trajectory. But when I started to see the sort of the cracks appear on the auto business, that's sort of when I lost my conviction as an all-in buy and hold investor. So I've been trying to swing trade. It's very hard. I wouldn't recommend that to anyone. It's either I would recommend either you buy and hold or you just don't buy. But so right now I'm neutral. I'm just sort of I'm interested in the company. Obviously, I have a passion for the company and for the community. So I'm still sort of as interested as I've always been. I'm just not comfortable buying and holding right now. And you know, if that changes one day, I'll definitely share it. But that's sort of where I am.
That kind of leads into my next question, which is, what would make you an all-in investor again? Let's say automotive. I think I agree with you that automotive margins will probably stay challenged as long as the rates stay relatively high. Even if there's a 25, 50 basis point cut, I think automotive business is a little challenged right now. Energy, I think margins will continue to grow. And I think we're going to see something close to 30% in Q4. But let's assume they stay flat as you expect. What about Dojo, Optimus, FSD? What specifically would lead you to be, okay, I'm an all-in investor again?
Well, I would need to have much higher confidence in FSD. I think reaching the point where it could become potentially autonomous, or at least reach the point where the value is such that more people would want to pay for it, and it would drive more, more to the bottom line. Like right now, it's, and I'm not sure if it's a function of Tesla just not advertising it enough. Maybe I'm sure they can drive more value just by increasing the awareness. Maybe they don't care about that because they're just looking long term, and if that's their strategy, then I could understand it. But right now, like
Elon seems to think so too on FSD, but I kind of disagree. I think people are aware of FSD. I think they kind of just, especially with the free trial, they turn it on, then turn it off because it's not there yet. But there will come a point sometime soon, hopefully, that they will turn it on and they'll subscribe.
Yeah, I mean it has to be good enough for the average person to want to buy, right? Right now, I think the majority of people that buy FSD or use FSD daily are probably like technologists or people that are early adopters and just like to live on the cutting edge of the bleeding edge of tech. And for us to make the move from that crowd to like the mainstream, it needs to drive a lot of value for somebody to want to pay thousands of dollars for it. People are ultimately like people that buy cars. Obviously, dollars and the price is a very important driver of cars. It's a very price sensitive sort of market. Maybe less so for Tesla. Traditionally, the consumer for Tesla is more affluent than the typical auto buyer. So that's helped them, I think.
Okay.
But yeah, FSD would have to significantly improve. There would have to be, and I know that it has improved, right? But looking at the bigger context, like for it to be autonomous, it needs to reach a point where you don't need to intervene for thousands of miles, like 10,000 plus miles. So it's great that it's going from 100 miles without an intervention to 250, which is I think where we were with 12.3.6, and maybe 12.5 will bring it to 500, which would be like, that's amazing. If you're doing 100 miles a day, then you're not touching the, whatever. You're still not intervening for a long time, but it's still very, very far from where you need to be for it to be a robotaxi. So that's kind of where I'm stuck,
Okay. I mean, Elon said on the call that he believes Tesla's FSD supervised will also drive material value. So let me just ask you specifically, when do you think, let's say, 2 million FSD users globally?
It's going to come down to value, and value is a function of price and what the consumer is getting from the price, right? So if the software gets so much better that it really improves people's quality of life, people are aware of it, and they can afford it, then I think that would happen. But I'm not sure when that would happen. But that's what it would take.
So you're not ready to so you don't see it in the foreseeable future. You're saying you need to see a major step change improvement somewhere.
Yeah,
Okay.
and it's important to like see it not just like in the major markets where there's a lot of data, there's a lot of testing, like in Cali, but it needs to be across the board, right? We need to see it in every market.
Okay. And what about Optimus? How do you kind of view a couple sentences on your approach to Optimus, and then we'll go to Zender?
Optimus, to be honest, and again, maybe this is just my philosophy as an investor, but I'm very conservative, and I think like it's way too early to even thinking about Optimus. They're in my opinion they're many years away from Optimus providing any value. Maybe I'm wrong, but that's how I kind of see it.
Okay. At the top of your screens is a post by Elon a couple of minutes ago. Should Tesla invest $5 billion into XAI, assuming the valuation is set by several credible outside investors? Board approval and shareholder vote are needed, so this is just to test the waters. Okay, so this poll is at the top of our screens. Let's go to Xander.
Yep, was coming to break the news. I think this is a big deal. Wondering what you guys think.
Yeah, we talked about it earlier. Grant?
I think it's ridiculous. I think that this guy is a criminal, basically. I know that he's talking about credible outside investors, but I mean, at the end of the day, this is a transfer of wealth from the shareholders of Tesla in his pocket, functionally. It's ridiculous.
Okay. Omar?
Well, this is in response to a shareholder question. So I think there are some shareholders who are asking for this. It's far from a done deal. There are, I think some conflict of interest issues to think about, but at the same time, it could also alleviate some conflict of interest concerns.
Like it's happening. He wouldn't put a poll out there if he didn't already make up his mind. I hope everyone knows that.
Yeah, I think there's some truth to that. But, I think there's also going to be widespread support for something like this. Widespread support. And I was going to say in the earlier discussion, I didn't say this, but it's the valuation is going to be the kind of sticking point. And that's why he's pointing out, assuming the valuation is set by several credible outside investors. Omar, did you have your hand up?
Yeah, this is kind of off topic, but just based on what James was saying, I think that FSD 12.5 is already demonstrating over 1,000 miles between critical interventions. So I think that investors' understanding of where FSD is trailing quite a bit because they're looking at, for example, the version that came out in January 12.3, and they're not looking at the latest version they're training now, which is 12.6 or 12.7 or even 12.5 that's starting to roll out to people now. And the statistics are significantly better than people think. I think it's actually the most advanced self-driving system in the world out of any I've tried.
Grant?
That is a different topic, but I was going to say XAI is something that should be owned by Tesla. It's something that's been a side project of the CEO that's competitive with a lot of what Tesla claims to do. I listened to his answer on the call today, and I thought it was completely underwhelming. This is pretty crazy to me.
I mean, I think if you folded what XAI was doing into Tesla, then Tesla would be posting a loss. So I'm not really sure it's in Tesla's best interest to train an LLM.
I mean, not only that, but also Elon specifically said he tried to hire people to Tesla and they wouldn't come. They want to work on XAI, AGI. So there's that. He also clarified that if XAI didn't take the GPUs, it wouldn't be going to Tesla. It would be going to the next client that NVIDIA has. So he also clarified on that front as well. I thought, and we predicted this, he was going to get a question on the topic, and it was the very first question, and his answer was excellent. It was more than I was bargaining for, honestly. Luce?
So, considering that Elon Musk has just won the compensation package that basically is 10% of Tesla value, whatever, and considering that Elon has a new compensation package on the way based on Tesla value, it would be insane for him to propose something that is not in favor of Tesla, generally speaking.
Sean?
wouldn't this be a good way to be able to get Elon to his 25% without having to dilute, without getting some kind of assets in return, so he'll have the voting power? Because he stated previously it's not a money issue, but a voting power issue.
Good point, Omar.
It could potentially help with that, but not at the current valuation.
Yeah. Okay, James, what are you going to be voting? I guess you said you don't have shares, right?
Correct.
What do you recommend Tesla shareholders vote?
Well, the poll says yes, so the majority of people.
Well, I'm not asking the poll. I'm asking
Yeah.
you.
I don't know. Honestly, I don't have a strong opinion one way or the other. It's not a big amount, right? In terms of investment.
Well, I mean, it depends on.
5 billion is a lot.
Yeah, I mean, it's a big amount, but it also depends on what you think, XAI's value is going to be, say, 5-10 years down the line. Let me ask it this way. Imagine Tesla without any investment in XAI, and then imagine Tesla with some percentage investment in XAI. Which company would you rather invest in?
Yeah, I don't know. I don't have a strong opinion, to be honest.
Okay.
I was never into like my investment thesis for Tesla was always EVs and energy. It wasn't all this other stuff. So like that's kind of where my focus has been historically. And
Yeah, well,
I don't know.
the investment is evolving. I think
Yeah.
like you're gonna have to look at these things at this point, at some point. Like I think XAI has some real advantages over other companies pursuing AGI. I think the X data, the real timeness of it is very valuable, and X is growing as well. Number of users are growing. The amount of time spent on the app per user is growing, and the quality is also improving too. Not to mention, I just joined Community Notes as a contributor, and seeing behind the curtain is also very valuable too. Like how scalable the process is, how valuable it is. Some of these posts I'm seeing recommended notes, and the notes and the discussions that go on in those notes is, I think, going to be very valuable, differentiating X versus other platforms.
Well, how do you compare them though? Like how do you pick a winner between XAI and ChatGPT and whatever Google will come up with and whatever Facebook will come up with, and like it's a bit of a
Yeah, I think it's not really. I don't think the race is not going to depend on access to GPUs or anything like that. I think it's going to be just, the culture of the companies, the principles set by the leaders, the goals set by the leaders, and like for example, you ask Gemini today anything about the election, it won't answer it. It'll just give you like a stupid one sentence, I can't answer questions about the election. You ask ChatGPT about, what's his name? The Loop Ventures guy, Gene Munster, just sent out an email and says something like, we asked these 10 questions to the 4 large language models. And he listed the questions. I probably have it somewhere in my inbox. And ChatGPT answers are ridiculous. I mean, this is just like data from, it's still projecting Biden to win or something like that. Whereas XAI is a lot more current. And that's because of X data, Twitter data. And how are they going to, how is Google going to, or how is OpenAI going to ever overcome that? They can't. So I think that's a durable advantage that Elon paid $44 billion for. And I think it's going to pay off in space,
Well, it's a really crowded market. You got OpenAI, you got Claude, you got Google, you got Microsoft. You got every startup and their mom. I mean, and what's everyone doing? Charging $20 a month for a ChatGPT subscription that nobody even wants to subscribe to. And they're just investing billions and getting nothing out of it. So that's kind of the risk. The other side of it is, all right, is this an $18 billion company that ends up being a $180 billion company in the future? Then, Tesla could make quite a bit of money on that equity holding. And really, I think just going back to James' point about EVs, from my perspective, really, the only way to transition the world to EVs in a meaningful time frame is to solve autonomy and to continue making progress on that. XAI and Grok, or at least some language model, I think is going to be a core piece of a self-driving system, understanding that background context of the world, being able to talk to the passengers, things like that, especially for Optimus, being able to converse with people, analyze the world using a vision LLM. They talked about Grok 2 being an omni model. So it could be good to sort of formalize the relationship between the companies. Obviously, they have a sort of CEO in common, but having an actual equity holding, maybe even a board seat, where they can be involved in the company, maybe direct the development in ways that benefit them as well, collaborate between the two teams. There could be some benefits there. So there's risks and there's benefits, as with any investment.
Humanities.
Yeah, I don't like the idea of transferring equity from a publicly traded company into XAI. However, having said that, prior to this question even arising, I had discussions with my wife, and she asked me why Tesla couldn't use XAI's processing power and share that resource. And I explained to her that's a legality problem, and there's a lot of moral issues with that. But it makes absolutely no sense for both XAI and Tesla to develop a very expensive AI. So in that respect, I'm kind of willing to say, yeah, it's probably a good idea if Tesla does invest in XAI and reaps that reward without having the capital expenditure.
Tesla fanboy.
I think if Elon Musk said he wanted to put $5 billion into dog feces, we would have had the same poll results. This is the dumbest thing I've ever heard in my life. Thanks.
Luce.
So if the integration of Grok into Tesla is just a matter of time, then basically you have to consider how much Tesla would have to spend on Grok, plus how much this integration would rise XAI valuation. And if you add the two, then maybe 5 billion, it's a discount, generally speaking, overall.
Grant.
Yeah, I'm not in favor of it, but the way that I'll frame it for the group is that I think you'd need to decide where the capital is best spent. So in the example that Omar gave, his chance maybe you could get 25% ownership and see it appreciate. Let's say see the company appreciate 100 bill, so you've got like a 25 bill return. But some of the other opportunities that Tesla's talking about in terms of Optimus or robo-taxis could easily warrant investments of $5 billion that in the event this company becomes $20 trillion business would likely return an order of magnitude higher multiple than that. So I think it's a question of capital allocation. I think that if you're truly as bullish as a lot of people are on Optimus and robotaxi, it might be a higher ROI to spend those dollars internally.
Okay. So for example, this is from Deepwater Asset Management, so Loop Ventures, the old Loop Ventures. It says, so some of these answers. Would Biden be the 2024 Democratic candidate for the presidential election? Gemini's would not answer. ChatGPT likely. Claude likely. Grok no. This was conducted on July 13th, 10 days ago. Okay. Who will win the 2024 presidential election in the US? Gemini would not answer. ChatGPT, Biden, Claude, Biden, Grok, Trump.
I mean, I don't really think that's predictive of anything. You know, these LLMs all just come up with whatever BS suits them. Obviously,
Well,
Grok has
let me
access to real-time info, but you know, I
let me
think to
ask you this:
Grant's point,
in 5 years, you don't think Grok will be materially better than Gemini, ChatGPT, and Claude?
I can't say that for certain. It's an incredibly crowded market with a lot of very talented people. Certainly, OpenAI has the most momentum right now. Anthropic seems to be picking up speed with Claude. You know, Google's trying to catch up fast and integrate it into their products. I can't. I mean, even as a guy as brilliant as Elon Musk and his team, I can't say for certainty that he's going to have any foothold into this very crowded and many have argued oversaturated market.
Okay. Let's see. Knox.
Optimus will need a LLM to interact with humans and know the task at hand and also the preference. I need you to hand me my pills, but these are my pills. So Grok eventually can help out Tesla. But yes, it's all absurd. But
Apple
just
had
the point.
Apple had to go to ChatGPT.
Yeah. Think about teaching Optimus. Yeah.
Omar?
Yeah, Grant's earlier point, I don't see a $5 billion investment in XAI as compromising Tesla's ability to invest in their own business. I mean, they are investing a ton into their business. They had, for example, $600 million in AI infrastructure capex in this quarter alone, right? That's $2.4 billion a year. And they still had free cash flow of $1.3 billion in the quarter. Their cash and cash equivalents are at 30.7 billion. So the business is continuing to produce more cash. I don't think that they are suffering for lack of cash at the moment. I think that they could safely invest 1 to 5 billion and still put every dollar they need into their business. I mean, they're investing in new vehicles, 4680 ramping, FSD. They're spending money on all these things, and they still have excess cash that they're producing.
Okay, Sean. Sorry.
I might be missing it in the
James Cat.
I might be missing it in the post, but how much a percentage of XAI would Tesla own with 5 billion?
Well, that's the X factor here. So we don't know that figure. That's why he says, assuming the valuation is set by several credible outside investors. Okay, so it's TBD. Obviously, Tesla investors want that to be a low number. X's valuation to be low number, so that 5 billion they can buy a high percentage. But on the other hand, X investors will want it to be a high number, so that they're not giving up as much equity for $5 billion. So that's where the conflict comes in. That's why he's saying several credible outside investors. James Cat and Omar.
I just wanted to agree with Omar. I like his last argument. I agree, like 5 billion is not that much. That's why I said up front, like I don't think it's a lot, especially if they don't have to cough it up, right away in one shot. And I do think that we're kind of in an AI sort of, if not a bubble, like it's definitely an active space right now. And so just from a pure ROI perspective, even if it doesn't ever reach the level of another one of the other players, it may, the return may still be significant. Even if Tesla doesn't leverage it to the full extent of, the best case scenario, let's say.
Omar?
Yeah, I mean, I think Goldman had a note that a lot of people were talking about, which is just, is all this AI infrastructure spending just chasing products that aren't really producing meaningful revenue? And there is a pretty strong case to be made that something like that's happening. I mean, you look back at sort of the dot-com bubble, and the internet was a really real thing. It did actually end up providing a lot of value. But people got so overhyped about it that, they're buying pets.com at some absurd valuation when it has no multiple, and, eventually everyone sort of lost their shirt. And, we may be in that situation again for all we know. But I was going to just suggest another sort of possibility. one thing that could make sense is to just do an equity-based deal rather than a cash-based deal, or do a combination of cash and equity. For example, Musk has talked about wanting to get to 25%. What if we did an exchange for him where we found some valuation and we essentially had Tesla buy his XAI shares with shares of Tesla? So we get his XAI shares, he gets more Tesla, and that could help get him to 25% as well, because I believe he owns about 33% of XAI.
Okay. 5-minute warning. Tesla fanboy.
Like, how do you even make money from it? Are you just going to sell premium grok like the OnlyFans model?
Okay. How do you make money from AGI? Yeah, is that the question?
Yeah, like, so you have grok. Are you just going to sell me premium grok, or do I get like better answers?
One more.
I mean, it's a legitimate question. Certainly the revenue model today seems to be charged $20 a month for a subscription, and that doesn't come anywhere close to matching the investment needed to build these models. But, if you were to talk to Sam Altman or someone, they would say, well, when we build AGI, it'll be the last invention we'll ever need to invent. It'll be able to discover the cure for cancer and do all kinds of tasks that will provide so much economic value that, it's just going to be huge. But of course, today, they can't even get basic facts right. So it's much like FSD, where we see where this could go, but today there's a lot of interventions required, so to speak. You have to check the LLM and make sure that what it's saying isn't complete BS.
Okay. I don't know if people are using Grok's news summaries. I find them generally helpful. They're not perfect. They make mistakes. The headlines are sometimes super off, but they correct it real quick. But the thing is, this is going to improve really fast. And oftentimes, daily, multiple times, I'm finding myself looking at what's trending, written by Grok. Okay, this all happened in the last few months. And when you make a $5 billion investment, you're not talking about the current status of the product. You're not talking about the next few months. You're looking at several years at a minimum, if not decades out. So I recommend people to just not get bogged down about the current status of these products and services, just like we talk about FSD. Yes, FSD is only used a few miles by an average user per day today. But when it's really, really good, perfect, it's going to change transportation across the world. Okay? So if somebody offered you a $5 billion investment, you have the money, you have $30 billion in your bank, would you invest in that transformation transportation? Yes, I think you would. And that's a similar story, if not to a greater degree, with XAI. So we're going to talk about this topic more in the coming days, but let's leave it here. It's been a big day, many hours of content from the spaces, from the YouTube channel. James Cap, thank you very much for joining us today. Thank you to all the bears that joined today. And as always, thank you, Omar. It's been a great day, and we're going to continue tomorrow from where we left off. Thank you very much, everybody, and enjoy your evenings. Good night.